we're now, there we go, recording. All protocols. We are friends, we are neighbors, we are cousins, and come onto the platform with respect. Your views, you're entirely entitled to them. Right, wrong, strong, dilute, and I look forward to sharing our minds with you. So this evening, I have a great pleasure of having reached out to my network, people who I know and trust and implicitly have either done transactions with, hope to do transactions with, and navigating down a path that we can all be on the road to enlightenment. So my panel this evening, I have a preeminent lawyer, a partner with Shepston and Wiley here in South Africa. I'm currently down here in South Africa, and we are pleased to have the ever lovely, the ever ginger. Her name is Leza Kotze, and she is a managing partner with Shepston and Wiley. Would you dare to come on camera for us, please, Leza? Can I ask you to unmute? Is the seance? I might have used my admin powers and blocked you off, but let's try that again.
I'm unmuted. I was saying thank you so much, Kura. Thank you for inviting me. It's lovely to be here, and I look forward to this informative webinar.
No, you are the ones that we've come to see. So we're going to be looking forward to what you have to say and do. Welcome on board.
Thank you.
All right. My next guest, I am going to introduce a young man who disgustingly has more hair than me, Mr. Simanga Madhlabuta. Would you care to come on camera and introduce yourself?
Thank you, Kura. Good evening, everyone. It's Madhlabuta, Kura. You're now butchering my surname as you hate on my excellent hair. Lovely to be here. Looking forward to an engagement conversation on real estate investment options between Zimbabwe and South Africa.
Fantastic. Thank you, my brother. Can I ask the best dressed man in real estate on either side of the Limpopo? He's in a three-piece suit, no doubt, shoes polished, looking immaculate. The ever lovely Mr. Simbarashe. Are you on my line, my brother?
Good evening, everyone. Hope I find you well. Pleasure to be here, and looking forward to the interactions and dialogue.
Wonderful, wonderful, wonderful. And last but absolutely not least, do I have Karen Nyenga of Fine and Country on my line?
Hey, Kura. Hi, everyone. Definitely online tonight.
Wonderful, wonderful, wonderful. Okay, so I've done the sound check. I've done the who's who in the zoo, and I'm currently acting as admin and narrator, and I've got a position to argue. So I'm firing on all fronts. We are sitting at 93 delegates and rising, so that's fantastic. You know, if you get half of what you had been promised or the registrations that are coming through, some guys are still logging in. I believe they're operating on African time, but I am Love Mochiwata's son, and 6 o'clock was 6 o'clock. So we're rolling at 6 o'clock. So I've sound checked. I've got all of my guests, 100% attendance, fantastic. I'm going to give the microphone to each of them, and I'm going to go ladies first. Karen, I have you. Can you just run through who you are, what your magic is in 90 seconds?
Oh, 90 seconds. Thank you so much, Kura, for the opportunity. Yes, I'm the licensee and the managing director of Fine and Country Real Estate, which is part of the international realty chain Fine and Country globally. So we're here in Zimbabwe, and we've been operating for 10 years. This is actually our 10th year. And we are in various markets, so residential, commercial, agricultural, but also the beauty about it is that we can have conversations such as this because of the fact that we are a part of the international chain. So we're able to assist people across borders, and that's the beauty of what we do.
So you sit in Harare, you have a team of how many with you there in Nigel's Lane?
We are at 19 now.
19 agents doing agents.
It's a small office. It's a small office.
Okay. You've got a branch in Bulawayo, I believe?
Yes, that's open up.
You see, so we've got a nationwide perspective. Welcome on board. Welcome on board.
Thank you. Thank you. Thank you.
Fantastic. Leza, would you care to give us your 90-second biography? I know we can be here all night. Res ipsa loquita and Jani, because, you know, a Latino.
With pleasure. I head up property and commercial in the Joburg branch office of a mid-sized law firm called the Shepston and Wiley Attorneys. Our head office is in Durban. We also have branches in Cape Town, Pietermaritzburg, and Richards Bay. And since our establishment in 1874 or whenever it was, property has always been a core practice area for us. So we really go way back in the property space, and we do all kinds of interesting things with property, residential, commercial, hospitality, solar and wind, alternative energy developments, you name it. We'd be interested to do it.
Delighted, delighted. Thank you very, very much. And can I say that you're my personal conveyancer? We did that transaction, a decade ago, if not more, if not more.
Not getting any younger. Absolutely, Kura.
Fantastic.
Anything that the Chiota family wants to embark upon in South Africa, we are there for you, and I'm available to counsel you.
I appreciate that. Thank you very, very much. I'm going to ask Simba to give us 90 seconds of who you are.
Okay, thank you, everyone. Simba Mupfekeri is my name. Property consultancy is the game. So I've worked here in Zimbabwe. I've worked in Dubai for almost 5 years. Back in Zim now, working with Pam Golden Properties. So yeah, specializing, focus a lot on off-plan sales. So that's where my major thrust is, projects, developments. That's where I specialize. Yeah, so pretty much that's me. I guess I used to do the same when I was in Dubai as well. I worked with brokerages there. I worked for developers there as well. So I think I'm pretty well-rounded when it comes to the property game.
Thank you very, very much. And you are an award-winning realtor, I understand.
So they say. Yes,
Your cupboard tells the story.
Yes, now Gold Club agent with Pam Golden Properties, yes.
Congratulations on that, my man. Cool.
Thank you.
And last but not least, a man who does he need an introduction? But I'll give him an introduction. Simanga of TDW, turn left, turn right. There's a TDW sign in a development. Simanga.
Thank you, Kura. So Simanga Madhlabuta with TDW and 10 property developers. We are a Harare-based property development firm. We've done a lot in residential, but we also have done a little bit in some commercial and hospitality, real estate. And yeah, I think our mandate is to deliver the future of the built environment. That's us.
Welcome on board, brother. Welcome on board. So because we're dealing with real estate, and we've always got to keep it balanced, when we are investors, buyers, sellers, whatever we do, I always believe that we've got to keep it legal and we've got to keep it safe. Now, my father and sister were both lawyers, and they told me that, you know, the few bucks that you spend up front is going to be the best investment that you make when you are involving yourself in real estate. So to keep us on the straight and narrow, keep us healthy, safe, and sanitized, I'm going to give the floor to Leza Kotze, who is going to just give us the four corners of the legalities of property investment and maybe some tips that you can say, you know what, I came on this webinar and I learned a few things from the gingerhead lawyer. So over to you, Leza. I'm giving you 15 minutes to break it down to keep us safe in this asset class that we so love.
Okay, well, I would start by saying if you want to embark upon a property acquisition, first make sure that you know what it is going to cost you. You may be focused on the purchase price, but remember there's a bond costs and transfer costs involved. if you think about a 1 million rand acquisition, that, may I say, pretty much 60% of first-time homeowners start with a property of up to 900,000. Your bond costs will be about 32,000 rands, and you will be paying the bank another roughly 6,000 rands in initiation fee. And there will be another 35,000 on top of that for the transfer. So very, very roughly on a 1 million rands acquisition, you're going to be paying 75,000 rands in costs. And I'm constantly amazed by the clients coming to see us, and, for example, never having been told by the agent or their advisors that there will be a bond cost separate to the transfer fee, or that they've haven't calculated transfer duty accurately. So please just be careful there. You'll probably be expected to fund those costs yourself. When you purchase, ask to be provided with the transfer deed of the property. The transfer deed will contain conditions that restrict your use of the property. So read that. Something that can also cost you money in the longer term if you buy a property without also obtaining approved building plans. So when you make the offer to purchase, yes, you're going to be inspecting the property and looking at damp and cracks and all the rest, but also ask for approved building plans, whether the seller has it. If the seller doesn't have it, the property can be transferred to you without it. But if you, for example, want to renovate later, chances are you're going to need the building plans, and you'll have to pay for an architect or a drafter at that stage to draft the building plans for you. So try and save costs of that nature. So then also the question is, who should be the buyer of this property that you have identified? Of course, you can buy in personal capacity. There's no restrictions on a foreign person, i.e. a non-South African, to buy property here. Not a problem at all. You can establish a company, Pty Limited. You may have a trust, purchase within a trust. But regardless of the entity, this entity will have to be verified as required in our FIC Act, the FICA Act, Financial Intelligence. So the entity will have to be verified, and also the source of funds will have to be verified if you're bringing in money from overseas. So be ready for those kind of questions to be asked. If you are buying in a trust, for example, please be aware that the verification extends to all the components, shall I say, of the trust. So not only the trustees, we also have to verify the founder, if the founder is still alive. We have to verify the beneficiaries, and we're talking about identity documents and proof of address and all of the rest. So so please be mindful of that. There are also different tax implications. And I just saw a question from Debbie come through. Debbie, I'll get back to your question in one moment. Might just make a note. So the entity that's taking transfer of the property also determines the tax that you have to pay. So, for example, if you buy to let, which is your typical investment property, that rental income, whether long or short-term income, you're going to have to pay tax on. So be aware in South Africa that, for example, the income tax rate levied on a trust is quite a bit higher at 45% than the income tax levied on a company, 27%. It's probably still going to be more than the tax levied on an individual, although will also be determined by the other sources of income that the individual may earn. We also have something called capital gains tax, which you won't be aware of when you buy the property, but one day when you sell, there will be a gain. The gain will be calculated, which is the proceeds of the property less pretty much what you have been spending on the property, whether it's renovations, whether it's your initial cost to acquire that property. And that gain is multiplied by an inclusion rate, which is 40% for an individual, 80% for a company or a trust, and then yet again multiplied by a further multiplier. So there will be one day, because hopefully you're going to make profit on this company, one day there will be capital gains levied on the entity that is now acting as your buyer, acquiring the trust. So these are interesting times. Interestingly enough, in 2023, the growth in sectional title units in South Africa outstripped the growth in freehold properties for the first time in 2004. Talent, thank you. I see your question, and I'll get back to that as well. Just make a note. Rentals. If I say growth, I mean the growth in value. The growth in value of sectional title properties was more than freehold, and it makes sense as well. I mean, your sectional title property is cheaper to build, cheaper to buy, cheaper to maintain. So it is definitely a factor in the investment property model for a lot of people. But please, 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 if you are interested in a sectional title property, do not buy that property without having obtained a copy of the conduct rules applicable to that complex, a copy of the management rules applicable to the complex. Read it carefully, please. There may be something that doesn't work for you. Just getting back to Talent's question just now. Talent, there may be rules in the rules of the complex prohibiting short-term rentals, like what you mentioned, the Airbnb situation. So make sure, if you are interested in short-term rentals, that use is actually allowed, or at least not prohibited by the complex that you are interested in. There may also be a definition of what constitutes short-term rentals, because after all, there's no legal definition of short-term rental. It could be less than a week, and it could be less than 6 months. So you should read those rules very carefully. Along with the rules, you need to look at the financials of that complex as well. Ask for 2 years financial statements relating to the complex, and you're going to read it very carefully, and with an eye on, number one, levies not being collected, levies not being paid by the whichever owners, and not being collected, so an arrears situation. It's going to erode the value of that complex if there's a shortfall in levies collected. There won't be maintenance. Other buyers will not, will be skittish about putting their money into a complex like that. And also, if you see a line item relating to legal fees, and it seems disproportionate to the size of the complex, ask for further information as to why were you paying a lawyer? Why were you paying, if you have a complex of 30 units, or why did you pay lawyers 200,000 rands last year? Ask the questions. I was approached by a client recently who was interested in a complex in the north of Johannesburg, and we did see quite a substantial legal cost. And when we asked the question, we were provided with documents relating to no less than 7 ongoing litigation proceedings, applications, defended proceedings between various owners and the body corporate. So you've got quite a litigious situation there. Well, why is it important to you? Well, because the body corporate is entitled to fund the litigation out of body corporate funds, which is your levies that you're going to be paying. So keep an eye open. Have a look at when last the complex was painted, what kind of maintenance it requires. Just stating the obvious, an old complex will need more maintenance than a new complex, but it may be more central, etc., etc. So read that carefully. In terms of new complexes, we can see complexes being developed with backup water, at least for a couple of days, with solar panels for however many hours. And these are the kind of things that's going to make the value of your unit grow in future, because increasingly buyers are on the lookout for those kind of additional benefits over and above the, shall I say, normal benefits of safety and security and, you know, shared maintenance and all the rest. So if we look at South Africa, and just very, very generally speaking, so the two biggest provinces in terms of value of immovable property transactions are by far Gauteng at 38% of total value, and then the Western Cape at 29% of total value. So that gives us almost 70%, 67% to be specific, of total value relating to property transfers occurred here, certainly in 2024, and that's a general trend. So if you are in two minds, if you want to invest, but you're not quite sure, you know, where you want to go, as a very, very, very general rule, so the properties in Gauteng, or certainly Johannesburg, has stagnated for almost 10 years. Since 2007, there's been some stagnation. But what that means is that your buy-in cost is so much lower. You can get a one-bedroom unit in a complex in Fourways, Sunninghill, Randburg, close to the highway, central, and you can rent it out, and you can a rental yield of 9 to 10% is absolutely achievable, because your buy-in is so low. So on 600,000 rand, and there are many, you know, professional individuals and couples who are working, and they need a small lock up and go from where they can get to work easily. I also see, in terms of the new complexes, there are added benefits, over and above security, a restaurant, a gym, common areas. So it's got a nice sociable feel about it for young people, and that's why they're popular, are very popular as rentals. So in Cape Town, we have a bit of a different situation. Prices there have grown quite a bit due to general trends. We've had semigration from Gauteng and from other provinces, from KwaZulu-Natal as well. People wanting to settle in the Cape increased, or accelerated, I should say, in the lockdown years, where a lot of people realized they can work remotely, or to some extent remotely, and that has led to a shift in, shall we say, behavior. But so Cape Town, your yield may not be what you are getting in Johannesburg for that reason, but of course your capital growth can be higher, because there is quite some pressure on prices. But there's also been interest from foreigners buying in Cape Town. I just saw a very quick question pop up there. Kura, you must tell me how I'm doing for time. What kind of funding options are there available for a foreigner? Well, you will have to, like all of us, sadly, if you want to apply for a bond, the bank essentially looks at two things. Okay, so the first question is, can you service the bond? So in other words, what's your income, and do you have proof of income, and what, you know, how are you going to be paying the installments? And the other leg of the application is there value in the property? So the bank will send out a valuer to take a look at the property and say, okay, or do a desktop evaluation and say this property is worth 1.2 million, but the purchase price is 1, so that's fine. So the banks do look at that, and you should explore that. So one other comment, you just reminded me of something. When you apply for a bond, that's obviously also where FICA comes into play. So just please remember, people. So foreign individuals coming from other jurisdictions are sometimes surprised by how onerous the verification process has become here. You need to declare everything, and that includes source of funds, your address, you know, who you are. So we call it a KYC, know your client process. We need to know who you are and how you operate. So those are the kind of administrative hoops that you need to jump through. Kura, I've not been timing myself. You tell me if I have anything left or if you're going to be cutting me off soon.
I am going to give you 3 more minutes on my
Oh.
time.
Perfect, perfect. There was an earlier question, I just saw it out of the corner of my eye, about off-plan. Absolutely. So off-plan, yes. The thing about off-plan is there's some risk involved because obviously there's no bricks and mortar yet. You buy on the back of a plan that's presented to you. You put down a deposit, which is often not really a lot of money, and you wait for the developer to build, and after which you can acquire. Keep in mind, we do have something called transfer duty, which is tax paid on along with your transfer fee. You pay transfer duty. Now, if you buy off plan, the seller will be a developer. The seller will be a VAT vendor. And if the seller is a VAT vendor, that transaction is exempted from the payment of transfer duty. The seller/developer will pay VAT, but you don't pay transfer duty per se. One very last comment speaking about transfer duty. So in the 2025-26 financial year, our transfer duty actually came down a little bit. There's not a lot of things coming down in price in these times. But for a property under R1,210,000, there is no transfer duty payable. And it does lead to a saving. Obviously, the more expensive the property is, the more you save. But just as a thumbsuck, on a R2.5 million property this year, your total transfer cost will be R20,000 less than it would have been last year, which does give one pause for thought. We certainly have seen a wonderful uptick in new instructions, transfer and bond instructions since last year. We had the elections and then rates came down towards the end of the year. The second rates cut was in November, and certainly in December, we already saw the instructions come in, and that has not stopped. And that just goes to show, you know, there was a pent-up demand. I think people held back a bit to just see, you know, how the elections, where it would go. And once the elections were over and those rate cuts happened, things started moving. So it's actually wonderful to be able to say at the beginning of a year, the property market is actually showing some resilience, which certainly I wouldn't have been able to say last year. Thank you so much.
Thank you, Leza. Thank you so much. I take it that we have you for a little bit longer and you have access to the chat platform. So please feel free to ask questions in the group, and anybody who's got a question for the lovely ginger lawyer, please pop her a question and she's with us to answer that question. But I know that we are in front of dinner tables and doing homework and competing for bandwidth. So I'm going to ask the mic to be passed along to Karen Nyenga. Over to you, Karen. Tell us, what are you seeing?
Okay, well, that was really great. Thank you so much, Leza, for all the information that you shared, which is very valuable, because a lot of times we find that as realtors on the ground, people get excited coming into real estate transactions, whether it is property for occupation or if it is property for investment. And some of these tiny details are things that they may not really take into consideration. So all the things which are very different slightly in Zimbabwe regarding sectional title, ownership and freehold, and how these communities actually operate is really great. So thank you so much for filling people in on that. I'm super excited about real estate, Kura. The thing is, I've seen the benefit firsthand, obviously, of real estate investment or just being within the industry and knowing and understanding how certain things move about. So I know that a lot of people would be trying to consider, and we get a lot of this, whether you're on X or you're on Facebook or you're on Instagram, you post a property and people are asking if the same property can come through in the color pink, move it from whatever location it is in, so that it can be a more affordable price. And we get to see a lot of the times people are always comparing Zim and South Africa. So we will basically talk about what price points would probably work for certain people. But mainly, I think it's something that people should look at to say, can you actually afford to invest in either side? I'm coming back to Zimbabwe right now. Speaking to people who already own a property of some form, whether it is a stand or it is an apartment or it is a house. If you're looking at any additional property, that's when we start to consider the fact that you're looking at your property investments and you're looking at yielding some form of a return. So for those who are buying additional land, if it's to land bank, meaning that they will get some form of growth in their investment based on maybe there's a higher demand of land in that particular area. They purchased it at $5,000 and now the land prices are 10, 15,000. I'll give you an example for that. In 2018, we started selling stands which are 250 square meters in size in an area or location called Glaudina in Harare, and that is along the Harare-Bulawayo highway. And close by to the FBC developments, I think, for people who are looking for a bit more precise location. And when that particular development started, we were selling those stands for 5,500 each. And within about 3 to 4 weeks, we found that the price had moved up to 6,500. By the time that we'd actually gone to the 4th month, not only were we battling to actually keep up with the demand, but already by then the prices had already gone above the 10,000 price point. And right now to this date, you'll be hard pressed to get a stand in the Glaudina area for less than 16,500. And you'll get more if these particular stands have got title deed. So for anyone who had money, $5,000 in their pocket, for example, in 2018, and you're looking at the fact that right now to date, if you're trying to put it back onto the market and you're selling it at 16,500, or if you're selling it at 18 or 19,000, you've already managed to get big growth. And this is without you having constructed anything. You haven't done anything else outside of acquiring your stand and then holding. This is one way people can actually come through. So be very astute in terms of trying to see where developments are actually coming through, where the populations are moving, where growth is actually coming into play. And as you keep an eye on those particular markets, you also then say, okay, fine, you know what, do I have a risk appetite to bank my money in there and hold and sit and wait? Because property is not necessarily an overnight thing in terms of gains. Some people have really got this this game on point, and in that particular aspect you literally know when to come in and when to come off. But for those who are in for the long run, and especially in this particular area, land could be something to consider, especially if you've got a smaller budget. And then some people have come through with new ideas regarding how to multiply their money. Whether it's they've come through as a group, whether it's a family or work colleagues. I have a client of mine who surprised me after a situation such as this, a presentation. And he calls me up and he said to me, Karen, you know what, after the presentation, we got together, we purchased land in the Sandton area. And we worked on getting permits to densify. So the permits that they actually then applied within their own group format was to construct duplex apartments. And they actually got a permit approval for 16 units in that complex. And they've since constructed 9 of those, which are now actually on the market at about 650 for the 2 bedrooms and 800 for 3 and $1,000 for the 4 bedroom. So depending on your budget and what your capacity actually is as an individual or as a group, you can come in for sub $50,000 and get into property investment. For those who are into rental arbitrage, who can do this, and I'm not giving advice, sorry, I have to really go back on this. Thank you, Cora, for actually cautioning us on this particular portion. But Everything, of course, right now is being spoken about generally. When you do call in and you inquire with any of the professionals here for something specific and relating to your case, we'll be able to assist you further. But for those who have come through to rent, who are coming in for Airbnbs, or they're coming in to rent forward to other people, there have been quite a lot of people who've made a lot of money in that particular aspect, but it all has to be guided by your lease conditions. So you have to know what kind of a lease you're actually engaged in, and your landlord or the person who's administrating that particular lease has to be very clear in terms of your business. Otherwise, at the end of the day, it could be terminated on the regards of a breach if you're not able to sublet further. But for those who have successfully been able to manage this, actually have numerous properties under their own portfolio that they're running under Airbnb across, especially let's just say Harare and in Bulawayo as well. We know that Bulawayo has its peaks when it comes through to the ZITF and the mining in Daba, all of that. And it's very difficult to actually get accommodation in those particular points. But the short-term accommodation business in Bulawayo is actually quite brisk. And then you come through to Harare, with relatives and friends coming through on the public holidays and stuff like that, you actually do tend to see that the Airbnb market is really not suffering in Harare either. And other people have actually gone further from that to start building clusters that are specifically geared for that, for short-term serviced accommodation. And that is a place and a market that people are actually seeing that, okay, you know what, this is actually making money. And this is also, they're building that cognizant to the fact that if they were in a community which has bodies corporate regulations and does not actually permit such business to actually be undertaken, they may not be able to extract the value from such an arrangement. And then further on, people are looking at purchasing properties, whether it is in the high density areas. Many people have done that because they found that if they can actually invest in high density, it's a low entry point, and they can rent to multiple tenants, so you've got multiple occupation. There are risks in that particular segment as well, because if you have got a property in the high density area, the levels of, or the potential of the levels of a default in your rental is actually more increased, unless of course you've got a way to actually manage this systematically, and the property is not too far from you if you're managing this in your own personal capacity. But the question then lies in the sense of why is it a lot of people will be kind of questioning how easy it is to come into property investment in Zimbabwe. People really do need to speak to professionals or people who are involved in the property market, whether it's coming through to your regulated estate agents or it's also coming through to speak with your lawyers, so that you can ensure that where you are actually purchasing or acquiring or interested in is actually a properly governed property, you know. So that means it has its paperwork, whether it is still under cession or it is under title deed, and you can actually acquire the property, or the property can actually transfer to yourself. So these are the questions that people have to actually take some time into asking to get into such facilities or into such kind of arrangements. We get a lot of people who are in the diaspora who are inquiring on acquiring property within Zimbabwe. And most of the time, of course, because where they are based, they're able to access facilities such as what Leza was talking about before, in the sense of they're able to get money from the bank. And then in those particular finance situations, they're able to come into new properties, whether they're new developments or, you know, individual standing units. And because of that particular arrangement, their way of managing their cash flow as well as returns on their investment is a lot more easier. In Zimbabwe, we're seeing that predominantly majority of the properties are being undertaken on a cash basis, but of late we're seeing that developers or even individual house owners are more open to working with terms. So it's either on a 12-month term, an 1836, or even at some extent 60 months. And some developers even have gone through to extend to as long as 10 years for various reasons. So this makes it easier for people to come in, whether it is within that $50,000 price point, or you're looking at something a bit higher, which is probably double that in the 100 or 200,000 price points. we keep seeing that there's a huge appetite for property. So the good part about it is demand by far outstrips the supply on the market. So where people are sitting there taking time as buyers to actually jump in on board on some of the property deals in Zimbabwe, whether it is in Harare or in Bulawayo, or even some of the newer developed areas or in cities and towns that are not your main capitals. You're finding that even commercial properties are in such great demand. Anything that's on our motorways, our huge traffic pools where things are going out, whether it's Zambia, Mutare, Mozambique, people are actually coming and building new towns and new properties within those, probably saying what, for argument's sake, more forgotten towns. And they're developing those spaces and getting really good returns in rentals. People are capitalizing on the agricultural industry, and they're coming through to push for warehousing, or they're pushing through for agricultural capacity storages and all of those various things. All of this is outside of our usual residential investment. So if you're coming and you're buying outside of the main cities, the prices are significantly cheaper. But again, people have to take time to actually investigate what is affordable and what is the legal process to actually acquire property outside of the cities, and what are the paperwork, and what do the paperwork outline in terms of what you can actually construct and the proper land use in these areas. So Zimbabwe is open for a lot of people to actually take advantage of what is available on the market. And we do understand, of course, regarding the constricted market in terms of borrowing or the cost of money, that this can be something that can potentially be quite limiting. But I mean, crowdfunding is probably one of the bigger way that I'm seeing quite a lot of my clients coming through within groups to say that we've pulled together X amount of money and we want to invest in such and such a product. And by this particular instance, they're coming in and they're making really solid investments on the ground. And they're not only looking at your Harares or your Bulawayo, but like I mentioned before, they're looking out. And then we'll visit our domestic holiday resorts and stuff like that. So these are your Caribas, your Victoria Falls, and your Eastern Highlands. We'll note that probably over the past, since COVID, there's been quite a significant investment within the hospitality industry, even in the Victoria Falls, and there've been massive investment in some of the bigger hotels. But also, a lot of people have also been investing in Airbnb units in the townships. Let's say Victoria Falls, we know that there was a huge CBZ project that actually was undertaken over there, and people bought up quite a lot of stands. They were about 1,000 square meters each, and at that time I think they were ranging between about $25,000 to $30,000 each, if I'm not mistaken. And people actually went and acquired those, and they've constructed on those particular properties, and they're also offering those particular properties on short-term accommodation. And Vic Falls being what it is, sometimes it is at capacity in terms of the hotels, and people are coming through and they built and they're managing to get high returns from that. And even a lot of people who are managing to sell the township experience to numerous parties, that is also really great. But looking at it, even in Vic Falls, there's the side where you look at the tourists, but you also have to consider that these hotels will be hiring middle management and senior management, and there's actually a deficit for staff accommodation within the Victoria Falls. So people can also consider building properties that are ideal for long-term tenancy by your middle and senior management within the Victoria Falls area. And that's a really great way to actually, secure your investment within that side. Of course, speaking if this whole SEZ thing comes through, and the fact that, the dollar will be working as the dollar, it makes Vic Falls a really great space. Eastern Highlands is also someplace that's also thriving. We're seeing a lot of investment going in there. We're seeing like proper creditable money being spent within the Eastern Highlands. And that's just goes to showcase where people are actually directing their funds. So I think we just have to sort of come out of thinking of the real estate segment on just your rentals and your sales. We have to figure out how to spread the dollar a lot further than what we actually have. Am I out of time, Kura?
You are, Boss K. Now, Boss K, Boss K,
I would be surprised.
hit me some numbers, please, ma'am. So it's
Oh.
just you, me, 152 participants online, and
Oh.
123 and growing on Twitter. We're live on X. Thank you
All
to
right.
my technology man, Mr. Kwaye, in the background here, boosting.
Mm.
So
Mm.
hit me with some numbers. What's a price point? I've got a question here. What has been year-on-year growth in Harare versus Bulawayo since COVID? Give me yields. Give me, if I put, what are the sweet spots and what are those numbers that I can put in my calculator? I've heard your feelings. Hit me some
Yes.
numbers.
My feelings. Okay, my feelings and my experience in terms of what has actually been happening. So it's not just purely emotive. But yes, in terms of what we have noticed in our office regarding the sales and the investment decisions that we have actually undertaken with certain parties. Just comparing pre-COVID or during, well, pre-COVID actually, and to this date, in terms of Harare, what we have noticed with our movements is that I've actually noticed a growth of over about 25% in terms of the, let's just say, the cost price of property in its own self. When it comes now to our return on investment, we're sitting comfortably within the region. I think we're probably sitting there between about 8.5% to about 12% for quite a number of our properties on long-term accommodation rental basis, and that's residential. For those who are then investing on short-term accommodations, and if they're doing it well, especially if they've acquired properties in good locations at good prices and then done a small renovation project on it to update it, I've seen some people actually getting as high up as 22% return on their short-term accommodation basis. And, you know, right now we don't have a very solid structure in terms of the governance of Airbnbs in Zimbabwe. So for those who are managing to capitalize on that, that's really great. I mean, just recently, we just seen the whole matter of the taxing of that. So maybe slowly this is going to catch up, and it might definitely shrink that growth quite a bit. But until that has really come through, we'll definitely see that. We'll definitely continue to see that return. In Bulawayo, the figures are not as high. Obviously, it's a completely different market. However, we're still seeing people are trading in Bulawayo. And for what we see in terms of the figures of operations, Bulawayo tends to really give quite a bit regarding the return on rentals. So it's pretty fair. It's performing also similarly about 7% to probably just a little bit under about 10, so 9.5% in terms of the rate of return for the portfolios that we're currently managing at the present moment in the residential section.
Two short, sharp questions for you. Is demand coming from within the country or from outside? And what's going on in Nyenga? Is it agro? Is it tourism? What's the deal there?
Okay, demand actually is coming in terms of the percentage that we actually see. Currently, we're seeing a lot of interest from internally. So we're seeing a lot of local market buyers, and those are our clients. We do, of course, get some diaspora residents who are inquiring. And like I mentioned before, they usually inquire more so for property that is coming through under a finance or a long-term scheme. But for some of the properties, majority that I'm seeing right now, a lot of Zimbabweans are definitely coming into the property investment game quite heavily. And this is not only just your commercials, your pension funds, your mining, whatever kind of conglomerates. This is your moms and pops and also first-time homeowners as well. So our market is probably hinged quite a lot to our local Zimbabweans with a significant sprinkling of our diaspora patrons. And then in the Eastern Highlands, it's a combination. So we're seeing a lot of experiential tourism in the Eastern Highlands. So there's and I'll mention this is not an advert, but all the same, there's a place called Zamunda, which is a recently constructed boutique kind of hotel, kind of very small one in the Lower Vumba area. And you go there, it's out in the mountains, but also it's experiential in the fact that they're also running a coffee farm. You've got Aberfoyle, which is also a tea farm as well. And you go out there, it's not just your R&R, your normal R&R, and then that's it. You've got the whole experience with the tea, with the spice gardens, and then you can play some golf, and then you can do some whitewater rafting, and then go out to the skywalk and experience that. So there is a combination of that, because of course down that side you have to also consider the fact that it's probably some of our higher producing agricultural bases out in the Eastern Highlands. So your teas, your coffees, your banana plantations, and those who have got access to larger portions of land are finding that that is an easy place to go. And not to mention the mayors out over in Nyenga, very, very proactive. They really are looking to engage with people who are looking at produce and products that can really boost that particular side of the country. So yeah, that's my 2 cents on that. Cora, is there any other question that I can assist with?
How is the conversation in your office when it comes to investing outside of Zim? You've got local clients. Are they looking for stuff down here? What sort of questions are they asking? What are they looking at? What's motivating them to look outside of the teapot country?
Okay, yeah. So it's the same thing. I think now we didn't get the reverse. It's true. So just as we were talking about people who are out in the diaspora always asking if property can be financed when they're making their acquisitions, it's also the same question, in that can a person who's a non-resident of whatever country but non-resident of South Africa actually get finance for property? And this is where we usually put them in touch with the bond originators that we are working with as Fine and Country. And we go through the process, literally hand-holding, to say, first of all, how much money do you have? Do you have a 50% deposit? Have you got an account out in South Africa? We take them through the process of understanding what it is about FICA. We take them through in terms of the process of how long it can take for your bond to actually be approved. If it is approved in that particular aspect, what it then means to buy in a sectional title, the locations, because it really is quite different in terms of, obviously, in Harare, we have our northern suburbs, we have our western, eastern suburbs and stuff like that. But in South Africa, it's really, really different. People are considering access to various things, whether it's the Gautrain and all of the other various things, safety, security. So we do have people who are inquiring to say, is the rental yield the exact same? What would then be our costs after levies and council bills, etc., once we have actually acquired in South Africa? So what is my actual take back? And then people will compare the rand rate and exchange control and all of those various things. So people do want to have a safe base if they do have that extra capacity to actually acquire property in South Africa. And we're seeing most of our people are inquiring more, not Joburg as much of late. We're seeing a lot of inquiries coming through most to Cape Town, Nice now, and what else? I think it's probably KwaZulu-Natal. That's where most of my inquiries have actually been going through for any of my Zimbabwean clients.
I'm gonna let you off with one more question. David's iPhone is burning him there. He says, is there going to be an oversupply glut of property in the next 2 to 5 years that could witness property prices going down in Zimbabwe?
In Zimbabwe, David, I think we'd really love to see that oversupply, but I think this the property market is quite regulated, funny enough. I mean, recently now we've just seen a moratorium going through whereby applications for cluster houses are being held for the next 90 days. So applications for anything is stayed for a period of time. I personally would just like to say no, because of the fact that we already have a significant deficit as it stands across the board. I don't know in terms of figures if we have even come down from less than 1 million or whatever, if it's still something that we're talking about from the 2000s as the deficit. So it's a really strong market in that particular portion, in that if there's a developer or there are developers who are able actually to catch up onto that. I don't think in 2 to 5 years definitely we'll ever have anything where we will have supply outstripping the demand. What we may have is a regulation, in that if we have more people coming through with newer properties, we'll start to see price stagnations in a sense. We're already noting with some developments that they're taking a lot longer to actually overturn, and this is probably because of the pricing in some areas. And yeah, the market is basically saying, look, this is where we can actually perform at. So where prices of properties are 260, 250, or even 350 ETC, we're seeing some negotiations in terms of the asking price. We're seeing some negotiations in terms of the terms of how to actually exhaust that particular balance that's owed. So the market will meet up in some way, but in terms to say that it will drop, it's a wish. We'll wait and see, David. Ask me again in 2 to 5 years.
Karen, you are a superstar. Thank you very, very much. You are a font of knowledge and you're dazzling us with your beauty. Thank you very much. I appreciate it.
Thanks, Cora.
I see we've crossed over to 168 views on streaming live on X or Twitter. I'm old school, so I call it Twitter. Thank you to the Twitter viewers for coming in and giving the support. We're admitting people as we go along, 167 on the call. So I'm going to take 15 minutes right now to give you my view. I am sitting somewhat as, can I call it judge, jury, and executioner? So I'm going to cross over now. Hey, there we go. There we go. It's quite a thing being admin and speaker and tech and admitting guys. But thank you very much, Choir, for all of your assistance on the side there. School fees are not going to waste. Right here. So the constant, I'm crossing the Limpopo 8, 10 times a year. And the conversation on either side from my South African colleagues is what's going on in Zim? Can we come there and earn some dollars? My Zimbabweans are saying, hey, can we come to South Africa and actually get our first foot on the property ladder? So I'm going to be the guy in the middle. I'm not Switzerland. I'm not neutral. And I'm not a pacifist. I love chasing transactions. And I've been quite fortunate in working with people on this side of the border where we actually closed out 23 transactions last year, facilitating Zimbos buying into South Africa in a clean, safe, legal, and cash flowing basis. So in 15 minutes, I'm going to try and give pros and cons and things to watch out for when you're looking at the transaction. So I've been accused in one group of faking to be a South African. No, I'm still very Zimbabwean, but I do reside here and have established interests in this part of the world. So if I can figure out my own computer, I'm going to set the scene. When we talk about investments, let's get our mindset right. Then I'm going to hypothesize if I had $100,000 and I was in Zim, or this equivalent amount of money in rands in South Africa, and then the nuances between the two markets, and perhaps give you some takeaways and considerations for you to digest when you're having the discussion. Then, of course, we must end with a call to action when applying strategies and tactics. So let's set the scene. Mindset matters. A good friend of mine and a colleague gave me the wonderful words, it's your action, not your intentions, that's going to get you on your investment path. My son is quite reading books and he's talking to Mindful 20s on TikTok, and he's always sharing that your future is going to be the sum total of your current actions. So wherever you want to end up, if you're old school like me and you read Stephen Covey, Start with the End in Mind from the 7 Habits of Highly Successful People, it's adding up, doing something regularly builds up and compound interest over time. A lifesaver, life changer to me was that you cannot save your way to a great fortune. You have to invest. Whatever you're earning, you're taking aside a portion of it and you're putting it in something that can grow faster than you, outside of your skill set and beyond what you are humanly capable of in the 8 hours a day that you've been given. So I like that one where it says you cannot save your way to great fortune. Applied knowledge is the most valuable. You're here, you're giving of your time, your dinner's maybe getting cold, you've got homework on the desk to get done, but you're here with us, and I'm really grateful for that. But it's applied knowledge that is going to get us over the line. We can read the books, we can access it, we can go on YouTube, but unless we're putting it into practice, we're not yet over the line. And then I love the African saying, as we're on the continent, if you want to go far, travel together. Absolutely, you can be an individual and have a plan, but get a team of people around you who can support you and your vision. You're right. So when we talk about investment, and I'm not going to read that whole screen to you, the 5 rules of investment. Keep yourself safe, please. Always diversify your portfolio. You are a human being by biology and geography in one physical location, but you've got the wonderful opportunity for you to invest in multiple things at various stages in your lifestyle or age, and take it as a free lunch. Diversification gives you the ability to recover when your expected outcome does not turn out as it should. So that diversification can be geography. If you've got a house in Harare, do you have something elsewhere? Do you have it in Bulawayo? If you're going to diversify, do you have an asset like Tigere, or are you going to participate when Eagle Read comes to the VFX next week? What are you doing to diversify your income streams and not have all your eggs in one basket? Research thoroughly. That's what we're doing right now. We're talking to one another. The information is out there, but we're trying to put a face to it, and people and human beings that you can pick up and have a cup of coffee and have the talk through. The research is going to save you making mistakes and get you implementing the plan that you want to get on. Thirdly, invest for the long term. And this is where I'm going to have the debate with my guys, that when Karen was talking, and it really struck me, I was reading, and I'll send out an analysis note on the Eagle REIT that's coming to the stock market next week. Eagle is bringing about $23 million of assets to the stock exchange, the VFX, and their financials are giving me a 5-year view. And there's a specific question, 2031, what happens? Or the 1st of January 2031, we have the currency dispensation until the end of 2030, but question mark. When we're looking at real estate, we've got to take a view as long as possible, because my son was laughing at me and he was saying that, you know, these Y2Ks, they don't even view marriage as that long. But trust me, when you've borrowed money from ABSA or Nedbank, they want you there and they want you committed for 20 years. You can even make it 30 years. So we're talking about long-term assets. So let's have a long-term view. Understand your risk tolerance. What are you capable of absorbing? So I look at it as what can I afford to lose? I don't want to lose any money. I'm not a charitable institution. I'm not made of gold. I do not have a trust fund with a silver spoon. So when I invest, I've got to say, how safe am I so that I can leave something for not my kids because they're communists, but my kids' kids who I have to look after. But my risk tolerance, I have to have a framework and say, this is outside and this is inside. And then investment 101, keep your emotions in check. You can have the feelings, but research, talk to people and get going. So let's talk about Zimbabwe. Zimbabwe is characterized to me by its high dollarization. That dollarization is absolutely solid and it is defining in the region. You can see that our prices are strong, our ability to invest outside is strong. We look into other markets because we have this dollar basis, and an apartment in Ferndale at 600,000 Rand looks so affordable. When you say, what can I get for $30,000 in Zimbabwe as opposed to 30,000 in South Africa, there's quite a gap between the product that you can pick up. The Zimbabwean market, Karen said, we're undersupplied. We have about 300,000 at my last reckoning, registered properties within the deeds office. So it's a small market, but the demand and the pressure is for assets that have title, that can provide security for people's money, and the population is increasing. Households are forming earlier and smaller, so there's more demand for that physical asset. Our population, as a good friend of mine, Brett from Terrace Africa says, and his Shona is coming along for a South African voice. He says, my Zimbabweans, munoda zvinhu, you like things. So we are now exposed, we're aspirational, and you see that through coming in the designs of the product that TDW is doing, or Oxprop is doing, or the product, if you drive around it and get yourself exposed to something like at Nyeredzi Ridge, you'll see that people are picking up home and garden, looking on the internet and producing a product that is ever increasingly aspirational. That old, tired Marlborough house is boring. Guys want better. They want safe and secure. They're going to clusters, smaller living, better amenities, shopping at the Highland Parks, the green fields, and we're more aspirational. Our history is that we have constrained investment options. So an international investor will tell you he can invest in cash, bonds, real estate, or equity. In Zim, the game is really between equities and property. That holds about 75% of investment value, be it at a personal level or at an institutional level. So property is really, really in focus. And I guess that's why we've got 225 people listening on Twitter and 160 something right here on this webinar. Zimbabwe is characterized by high construction cost on an absolute basis. By supply constraints, we can have Kaya cement not deliver cement when a kiln is down. We can have challenges out of better bricks where capacity is reached and they freeze production, and you now need bricks because there's this hungry beast that wants to go. So we are high construction cost environment, and that has to have an impact. It has an impact because if there's existing stock, you are competing with existing stock and new stock. There's an interrelation between those two, and the rational investor is going to want to buy the cheap and sell the expensive. So you're going to want to buy a 3-bedroom apartment, maybe reconfigure it so that you can make it an Airbnb to get more income out of it. Maybe on the side of Enterprise Road, you've got a house, you make it a business, you're now getting $3,000 rental. Instead of getting from one single tenant, you're getting $1,000 rental. So we are playing that game. We are low liquidity environment, and I say low because our mortgage component, a good colleague of mine, she's on the call right now. She'll probably qualify the number for me, but I don't think we've got 5,000 active mortgages in Zimbabwe. So that's the constraint that Zimbabwe is. I'm not knocking it. I am not speaking down against the country, but I'm saying that's the water that we swim in. As opposed to on the other side of the river, South Africa is a $400 billion GDP, and real estate is always driven by GDP growth, by size, by liquidity, by performance. If an economy is doing well, there's more demand for people, for space, for retail space. So you want to hitch yourself on a growing economy. That's true in Zimbabwe as well. If we attain that 5% a year that we're hoping to and we're predicting, that's only going to put more demand on the real estate as it sits right now. Sorry, that. South Africa differs from Zimbabwe in that it is already mainly urbanized. It's 67% of people live in urban areas, be it a metropole or a smaller town like a Makhado, the old Louis Tricard. People are in town. So what that does means that there is a huge gap between affordability and demand. So the rental stock is highly sought after. At the very bottom end, the state has done about 4 million free houses, RDP, that they've given away. But above that, in the 5 to 20,000 Rand a month, affordability is really a challenge. So the buy-to-let space remains very robust. There is a new association, well, it's not exactly new, the South African Multi-Family Residential Association. They've got 15,000 units that they have developed for rental for, I call them the young urbanites, who've come into town and they really need 60 square meters, two bedrooms, and they rent those out, and that's where they're going to live for a good while. The average first-time age of a buyer in South Africa is 40 years. So between when he started working at 20 to 40, he's renting. There's a cash flow opportunity there. South Africa is as a market, It has product from literally from 100,000 to 100 million if we go down to Camps Bay. A very broad market with a significant depth. I like it in that it is legislatively predictable. What that means is it seems not to have the propensity to issue SIs and change your life on Thursday night at midnight, because what was allowed yesterday is no longer allowed today. So the idea, and I've been consulting today with 2 clients in Harare who were looking to do a change of use in a subdivision, to say, Kura, how long is the 90 days going to last for that we saw the moratorium being put out for? In South Africa, there's a lot broader consultation on that and feedback, and you can often, interest groups take government to court, and there's a more moderated approach when dealing with changes in legislation. Then from a Zimbabwean perspective, I crossed the border. There are 2 transactions that I'm looking at. They're specifically township-oriented, and the leverage that I can get on that is 20 to 1, 5% down. The funder, yes, it's a special purpose vehicle, are able to provide 95% of the funds that are required to do that. So I would say from a 99% of us here, I know there's some Zigananda who are here and can afford a lot of things for cash, but the rest of us, if we borrow money, there is, I'd call it from a Zimbabwean perspective, unlimited liquidity. Okay, so if I had $100,000 to invest in Zimbabwe, where would I put it? Would I invest? Absolutely, guns blazing. Zimbabwe has the amazing attraction where I started right at the beginning of dollars. Now, if you can get, and I'm going to borrow an expression from an engineer, he always says Zimbabwe has short cash cycles. Can I put my money in? Can I spin it? And can I get it out? With the dollars, and I laugh with people when I'm here in South Africa, they say, Kura, why do you keep on going back to Zim? And I said, well, because when I go to Zim, I can do a deal and I can walk away with a brick of blue notes. And that's a fantastic cash cycle, and it turns around quickly. So if I had $100,000, what would I do in Zim? I would be scouring the development corridors. You can pick one. You can call it the Enterprise Road Corridor. You can talk about the Avondale Local Development Plan. You can talk about the Local Development Plan number 22 that has extended the city's boundaries. Look at what Eastleigh has become. Look at what Alex Park has become along Churchill Road. Look at what Enterprise Road is exploding to. Look to add value to an existing asset. That asset might be yours. It might be your parents. It might be a family home. Whatever is available, try and add value to that, because you're going to get an uplift. Instead of relying on one tenant paying you $1,000, you can do mini malls or let to a commercial with have 2 or 3 tenants. You're going to have uplift. Let alone the value of the land that you're sitting on. We've seen Pomona go from right in the early days with the late great Givmo Munyanyi and the Radar Property guys. I remember looking at that ground and doing a scheme for them at $50 a square meter. I think the Campbells are exiting in that land around electro sales. They're exiting at over $250 a square meter. So a 5-fold capital increase in this lifetime as cash money, USD, in your pocket going into your safety deposit box. A second play that I love is play the land development game. If you can affordably bring to the market 300 to 500 square meter lots at anywhere from 65 to the Northerners, Nyeredzi Ridge, what's being done by Oxprop, Borrowdale Lakes, I think it is, or Pomona Lakes, Westprop, all of those guys, CBZ doing Northgate. Northgate hasn't crossed the $100 mark yet, but they start at 65 and it rapidly increases as the phases go up. And guys, if you can get in and get a bite of that action, you'll be doing your balance sheet and your family a favor. The smaller play is if you can subdivide, build and sell units. Now, this is not every man's game, and I'm not talking about getting into Simanga's space and competing with the wonderful work that they do, 15, 20, 100 units. They're going to be doing over 100 units for Old Mutual and Prospect, but on a family basis. If you've got 8,000 square meters as a family, can you subdivide it and moita kanzato, and you sell a stand, you get some cash, and then you build. The building margins, when you've got well-located, titled land, you are going to see at least a 50% over cost. So if land is coming in and you service it reasonably, don't do the cheap stuff, do it properly, you will exit that land at probably 1.85 or 2x the value of the land that you put in. So developing land that is already paid for in a good location, subject to the due diligence of, is it close to sewer, and you're not doing crazy gymnastics. You can get away with some subdivisions with septic tanks or biodigesters, as some clever people are doing. But the game is do what you can, what's within your means, what's next to you with a funded land position. Then a fourth one is if you can get to repurpose assets. And that repurpose asset sounds hell of a lani, but what it really is just seeing an additional use of something that's changed. Our CBDs that used to have barbers now has mini malls, it has Kwame Mall, it has what have you. That's one example. The rentals on those things are knocking northwards. I've seen with my own eyes rent rolls of those my stalls knocking over $150 a square meter. That's a lot of money. If you've got an opportunity, if you're in a small town where you've got, look, even the Meekles have been doing it. An architect friend of mine has been doing a lot of work creating those mega markets, converting those to Meekle stalls. That is changing the use of an asset. The bones are there. So utilize those bones and get some value and squeeze some value out of existing assets. On the converse, if I had 2 million Rand to invest this side of the Limpopo, I would choose to look at buying the dip. South Africa, right on your phone, if you bank with FNB, they've got an incredible app which has Nav Home and Navigate Home. You can pull up transaction records, get a computerized valuation that can tell you what is an approximate value. There are distress situations. Interest rates have stayed higher for longer in this country. So there are people who are under pressure and are relinquishing or downsizing or just literally giving up. I wouldn't advise going naked into a competitive auction kind of environment, but there are distressed assets that you can buy at less than the reasonable market value. I recently bought a property in South Africa here, and it was a deceased estate. There was not that much negotiation. Guys, here's the money, let's do a transaction, and you close out. And I believe I got value buying from a, they weren't distressed, but they were a lot more dispassionate than somebody who's going to haggle with his life savings. I would then, let me move this next point. I would utilize South Africa's strength. So if I had $2 million, if I was a non-resident, I could then at least leverage my 2 million to make it 4 million. If I went to a bank with a reasonable cash flow prospectus, they would quite happily lend me 50%. So my 2 million, I could create a 4 million war chest and go out and acquire assets. What assets would I acquire? I would have the mindset that I remember I said in Zimbabwe, we're looking at short cash cycles, cash deployed, cash back, build, sell, subdivide, and earn money quickly. In South Africa, I'd take a more conservative view. My money is cheaper. It is borrowed money, so it has a cost. Currently, prime sits at, or by the time you just got a little bit above prime, work on 11%. So with that 11%, I can take my time. I've got finance that is self-amortizing. So I would look to buy the non-traditional, non-sexy properties. And what are those? Those are properties that they don't look great. Perhaps my too cool son wouldn't want to live there, but it'll be a 2-bedroom in a working class area where somebody needs to be on a taxi route or on a bus route to get to work at a reasonable cost. The rental is going to be 5 to 7 grand, and they're going to acquire that property because it's making so much economic sense to them. It's got schools in the area. So some of those areas, we can go to the east, to your Boksburgs. We can go to the north. We can go towards River Sands. So that's north of Stain City, but south of Diepsloot. To the west, we can talk of the Floridas, those kind of areas. And then my fourth category with my 2 million rand is investing in beds. And those beds, I'll be guaranteed, tsikidzi free, no bed bugs. And the beds I'd invest in are, there is a gap between charging per bed than charging per tenant. So if you look at the student accommodation market, you can get 2 beds reasonably next to a university. So you can buy a sectional title in Pretoria and do that. You can do it in Bloemfontein. Any of these university towns, you can squeeze more warm bodies and get a better rental out of that. I'm quite happy that some of the clients who've bought with me have gone the Airbnb route with the units that they've purchased here in South Africa. And I'm ever learning. I can't say I've done it myself, but they show me their bookings and they are 94% full or 100% full, and the Airbnb game is turning money for them. So have a strategy. You're going to have somebody on the ground to help you with all of these decisions, kicking the tires, doing the mathematics, plotting the trends, but it is doable. All right, my tech is now sticking on me. One second. There we go. So if you're following me on Twitter, you know that I can't go a week without being asked the question, Kura, South Africa is so much cheaper. Zimbabwe is overvalued. It's so expensive. Let's unpack that. Let's have that conversation, and we'll carry this on when we have given the open mic and we're having the debate, because this was never intended to be a one-way session. I argue that Zimbabwe has huge capital upside. If we're investing, as we do currently, in building our homes and buying clusters for cash, woe betide the day that the floodgates get opened and there's mortgage finance available. I think that the appetite for titled land and titled assets will only catapult. So on a capital basis, on an uplift basis, even though the prices currently are higher, I would say Zimbabwe has the headroom for greater upside. I would argue that currently, and I qualify it by currently, there is a higher income yield. Simba is probably going to tell you he can get 10 or 12% if he buys a property in Warren Park and he rents out the rooms at $80 a unit. He's going to get 10 to 12% return on his capital. In Joburg, I'm going to be lucky if I get a single digit as a gross yield. And then by the time levies in the city of Joburg has taken a bite, if I end up with 6%, I think I'm doing okay. If I go to some of those north, south, east, west areas I've spoken of, I could probably get that up to about 10%. But because my money is costing me 11% over time with escalation and the amortization of the loan, I end up on a long-term view better. But in the short run, if we're talking about a sprint, absolutely. I'm running the comrades. Simba is going to be with young Charamba doing the 100 meters, and Zimbabwe is going to win. The system in Zimbabwe has shocks. You can get an SI, you can get a ministerial declaration, you can get a currency change, and that shock feeds me into the earlier question I made. What is your risk appetite? What will you do if things can go wrong? So if things can go wrong, what's my plan B? What's my fallback? How do I exit? Then Zimbabwe is an expensive and thin market. We've seen prior to elections, we had so many civil servants receiving wonderful Nostro mortgages, and that bid up the market. I remember Pokugara just sold out in a hurry. I mean, that was 100 and something units at $300,000 to $400,000 because the money was available. So it's an expensive market, but it's a thin market. And the agents I speak to cross-border are telling me that transactions are getting thin on the ground. But notwithstanding, that's the environment that we're talking about. In South Africa, I would argue that you get lower returns, but they're steadier and they are slow burn. They last longer. I can do a cash flow projection with a 10-year conservatively, but probably 15 years. And I can get away with that and say, look, in between here and there, I have a high probability of success and a low volatility of that return. Rentals are rising. We've just got back to positive rentals. I think last year we did about 4.5% rental growth. In capital growth, pretty much similar. So my asset is growing, my revenue stream is growing. Yes, there's a caveat, costs are growing too. So levies are coming and biting us at the heels. So you have to be mindful of that. You want to buy in a structure that allows you to write off those expenses against your tax. And I would say South Africa has that wonderful OPM, the OPM dividend, other people's money. I can use other people's money at a fixed price, not without risk, because interest rates can move, and when they move, I can get burnt, but I've got strategies around that. But I can play in the game and have a bigger asset base of my own money. Whereas in Zimbabwe, I have the most expensive money in the world. It's the money out of my back pocket, and I'm constrained because I cannot multiply it. Yes, Karen spoke earlier about buying in groups and what have you. That's another way to circumvent it in Zimbabwe. But in South Africa, I have access to that fantastic liquidity at a lower cost price of entry. And then here, Leza said it earlier, that taxes can be your friend. Interest is fully deductible. The costs of levies and property management fees are fully deductible. So your income as it comes in has a tax shield around it. And you can put that on your tax return, and the cash flow does what it needs to do. At some point, taxman is going to come knocking and asking. But if you keep your records up to date and you declare, Bob is your uncle. All right. So what to do now? Let's have the conversation. Speak to a Simba, a Karen, and myself. Assess your portfolio. What have you got? What are your exposures? Where are you trying to get to? Let's set goals together and let's do a needs analysis. Do you have a child who you're looking to provide for to say, he's going to go to university. Can we get a flat? So instead of paying campus key 6,000, 7,000 Rand a month in fees, can we get a mortgage property, put the kid in after 3 years, we sell it, or we continue to lease it because we're going to investment there? There are 1,000 ways to skin the cat. Gauge your risk appetite, because nothing is risk-free. And I will never tell a Zimbabwean that taking your money from Zimbabwe and putting it in South Africa is not danger. There's an inherent currency risk. If you come in on a US dollar base, the US dollar to the Rand has an appreciation or depreciation, whichever way you want to take it, of about 10% a year. So if you put in 50 grand today, if the property just stood still and you sold it a year later, which is not an advisable strategy because you're going to have lost money because of transaction costs and prices don't rise that fast, the rate on you would buy your $50,000 back at 12 months from now would on average be 10% less than you paid. I'm tongue-tying myself here. The currency depreciates on average for the past 15 years. Yes, it has spikes and troughs, but on average, you can bet on a 10% depreciation. So there's no such thing as a riskless position. So you're going to take some risk. You're going to take a view. Tenants can default. We've got some horrible stories, but legal Leza with her ginger hair is quite on the side and ever ready to wield the sword to get us out of sticky situations. But there are risks that are inherent. Structure appropriately. The structure I am always reminded on is, what is your intention? If it's one property that you want to hold on to and you're raising finance as Kurachiota, then do it in your own name. It's quick and easy, it's cheaper on taxes, and Bob's your uncle. If you're trying to get beyond 3 or 4 or 5 properties and you want to leave it as legacy to your progeny, they say structure it as a company or as a trust. And that's the discussion that you and your financial advisor need to have. but a company gets measured on its cash flow and it has an unlimited upside. If you double your turnover, you've got a higher income, you qualify for more money to borrow from the bank. As an individual, if I borrow, then I am reliant on a salary or a fixed revenue stream, and that's going to cap my ability to grow. So the ball is in your court. That's my view of the two markets. I am invested on both sides of the market. I prefer the kind of liquidity that we have in South Africa because I'm trying to build a base. I'm in the last 10 active years of my working life. By 60 years old, I want to be visiting my sons, hopefully not grandkids. I hope they behave, but I want to travel with somebody young and beautiful and see the world and drink margaritas. And my portfolio, I hope, will be looking after me for that. So that is my presentation. I have not been governed on time here. Mr. Kwaya, I'm blaming you that you did not restrict me on time. But that is my presentation. I'm going to now stop presenting and I'm going to be listening and going into the comments and then also answering questions that are there. And I'm going to ask young Simbarashe if you can bring us up your game. I'm going to make you an administrator so you can share your slides. I know you were up all night preparing your slides and cooking us something great. So give me 2 seconds, Simba.
Okay, Kura.
All right. You are now driving, my leader. You are the host. And you can, if you want to share slides, go right ahead, brother. Or if you're going to speak English, do it in your best English accent.
I think what I'll do, Kura, just share a slide quickly. I'm just going to compress everything that I have in the slide and try keep it under 10 minutes, obviously, just to make sure that we are on time, given that you are not on check. So pretty much, I'm going to focus my presentation on which areas one can look at, especially if you've got a small investment, let's just say up to $50,000. And then we'll just go through the numbers quickly, and then pretty much I'm open to take questions at the end, but feel free to let me know if there's anything you need during the presentation. So basically, looking at real estate investment within Zimbabwe, there are quite a number of it's expensive according to us compared to South Africa, but your returns are much higher, as Kura had said in his previous presentation. I think if you're looking at the Zimbabwe market, yes, at the moment it would seem like a spin because in terms of long term, anything can change. So it's about sweating the assets at the moment and trying to get as much as you can in terms of return in the given time, whether it's up to 2030 or it's up to 2035. But what we want is for you to make money now and then move forward. So first area I want to look at is residential trends in growth areas. So basically, let's look at new areas that are developing in and around the capital cities. So the investment mode here will be to buy probably undeveloped stands from the developer, hold for a period of time, either develop them yourself for resale or for rent. And it's always good to look into suburban areas. Harare keeps expanding, and it's important to look into those areas, jump ahead of the curve, see areas where you can possibly get future growth within that. So looking at your potential yield in these areas, in terms of resale, you can looking anywhere between 15 to 30% over a 2 to 5 year period. So we've had areas where we started selling properties at $50 per square meter from the developer whilst development was going on. And by the time we got to, is my presentation still showing? Hello?
Sorry, I'd lost you as host to try and deal with some admin issues. You're back there. If you can reboot your presentation, you're a host and can have sharing privileges.
Okay, let me do that again. All right. Can you see my presentation now?
Yes, sir. You're back on.
Perfect. So I was talking about looking at residential stands in growth areas. So there's always upscale in looking at such developments because your enterprise is anywhere from $8,000 to about $15,000. But again, this can grow anywhere from 15 to 30% within a 2 to 5 year period. And usually the beauty of buying from the developer initially is that the services are still coming into place. So services or infrastructure, roads, electricity, water may not be in, so the land values are much lower. But as the developer completes the servicing and gets their compliance, the stamp prices significantly go up. So I would encourage people to look into such developments, into such areas, whether it's in Rua, whether it's Southview, whether Fidelity, Norton, Visa. Always look into such areas because there's a lot of opportunity that can be picked there. But again, do your DD on the developer. Just make sure that they will finish what they started, so that at least you're guaranteed that there will be title on that piece of land. Should you decide to buy, and like they always say, the land values across Zimbabwe have continued to appreciate over the years, and this obviously has an impact on the net rental use that will be achieved in these desired locations. Another area to look at would be your high density residential stands or residential properties. So pretty much buy land in 200 square meters in Ziarasekwa, for example. They're going to buy that for $8,000, $10,000. It'll probably cost you around $35,000 to actually build that property. But in terms of renting it out, probably it's a 6-room property, earning anywhere from $50 to $100 per month per room. And once you start doing the numbers, you're easily achieving above 10% on those units. The upside again is a consistent demand with the low vacancy rates. So pretty much you got high demand in these areas and the vacancy rates are usually very, very low, as opposed to South Africa, where in some of these properties that you buy into, your void periods are quite high. And sometimes it might be difficult to move in a tenant who's not paying and all of that. But it's much, much easier in Zim. Again, the risk there will be a high turnover and needs more of a hands-on approach for you to really manage that investment type, but it's quite lucrative in the long run. Student accommodation. So there is some good opportunities in student accommodation. And again, follow the universities. I think we've had a proliferation of universities in and around Zimbabwe. So areas like UZ, Gweru, MSU, NAST, Bindura, Great Zimbabwe University, Lupani, and all those areas. There's scope for actually good investment in these locations because the universities are there. But in terms of housing for students in a lot of these locations, it's not adequate to meet demand. So should you buy something close to universities, you again got potential for a high return yield because these students are renting anywhere from $100 per room going up. And some of them are sharing. So you'd actually have 2-3 students in a room, each paying $100. And once you start adding the math, you know what sort of returns you should expect from that. Again, it's a seasonal product, but again, the higher rentals should be able to cover you during those vacancy periods. So it's quite a good opportunity to look and make money there. But again, on the other side, it's got strong management needs because you need to have cleaners, you need to supervise what's going on. So it needs a more hands-on approach for it to make sense. But I would say there's lots of opportunity in student accommodation. Again, let's look at commercial stores and small retail units. Again, let's not focus all investments on Harare. As you move out to the smaller towns, there's lots of opportunity there, whether it's at Mutoko Center, it's in Murewa, Chikutu, Shawane, all those areas, because we are largely a trading nation and we've got a lot of people reselling product, they always need space to operate from. So whether, I know Kura spoke about mini malls, even in like what Nikos has done, as well as a lot of the buildings within Harare CBD, it's the same model, but replicated outside of town. And the land is much, much cheaper outside of town because you're either buying it from the RDCs, which are your rural district councils, or you're buying it from, let's say, from RDCs, from the councils there. And with the minimum investment for these commercial stores, which in more often than not are prefabricated, it's a much lower setup cost, but in terms of the return to rental income and returns on those, they're much higher. So it's definitely something that one needs to look at. And I guess with more and more business spreading out of the capital city, then there's growth there for investment, whether it's yield or actually capital appreciation. It's best to look into these areas now. Let's talk about agro-residential plots. Because Zimbabwe has an abundance of land outside the capital city areas, and it's about looking into these plots. So these could be 1 hectare in size, 2-3 hectares, small holdings where one can live on the property as well as run a small business off there, whether it's horticulture, whether it's chickens, piggeries, and all of that. It creates a whole lot of opportunity, and rightfully said, a lot of places outside of the capital city are looking at land prices anywhere between $2 and $10 per square meter, just depending on the size. So I would recommend someone looks into agro-residential plots, because the value, again, for appreciation, there's huge scope there. As the cities expand outwards, more and more people move to these areas, because it's still within close proximity of the capital to travel. But at the same time, there's key considerations like water, farming risk, land tenure, etc. But yeah, these do make a lot of sense. Right. Another way, again, sweating the asset is crowdfunding and joint ventures. We've actually seen a lot of people collaborating, coming together to pool funds to set up investment vehicles, whether it's for your own personal investment or it's for some sort of business. Partnership approach is a shared risk, and it also helps with raising adequate capital to venture into much larger projects. The clients the day I was talking with were looking to buy 2 hectares of land, split it amongst 4 people, with each person getting approximately 5,000 square meters at under 50,000. And this is located less than 20 km from outside of Harare. So these are some of the projects which you can look at in terms of partnerships and joint ventures. Again, people are getting together to set up small units in smaller towns where you're building up core houses, you're building up nice accommodation in these smaller towns where it's much cheaper to build. Land is cheaper, but in terms of return, they're yielding anywhere between 15 and 30%. Other investment vehicles to look at will be your REITs, like your Tigere, Rivitas, and the Eagle REIT, which Kura was talking about, which is coming live this week. Airbnb has been a favorite, especially within the urban areas. Major focus on studio and 1-bed apartments. Target market will be experts, holiday makers, and professionals. Investment ranges anywhere between 40 and 60,000. So anything in the avenues in Avondale, studios, 1 beds, 2 beds, they're making a very good return, and you earn anywhere from, again, you're looking at between 8 and 10% return, because a 1 bed in the avenues area, for example, is anywhere between 350 and 450. A 2 bed, that amount goes up to 600, 650, just depending on where it is located, vis-a-vis a purchase price of 50, 55,000. So already you're hitting above 11, 12%, looking at your flat, studios, and 1 beds. Recommendations, again, in terms of best yield, I'd say high density rentals and student accommodation offer the strongest ongoing returns. If you're looking at appreciation, you're looking at residential stands in fast developing peri-urban areas to provide maximum capital growth. If you want a balanced option, you look at your commercial stores and growth points and combine that again with steady income and resale potential. And across all these investments, you always advocate for legal protection, work with registered lawyers, have contracts denominated in USD, have properties with clear path to title, whether it's title deed, local government sessions, and etc. At least these ensure that you're dealing with credible people, and then you're not duped out of your hard-earned money and your investment. I've just painted a scenario here for again, this is just a high density rental example. Construction cost you anything between 35 up to 45,000. This is including cost of land, cost of construction. For a 6-roomed house, you're looking at 70K a month. Your income is about 420, which gives you a gross yield of about 10%. So I've just broken it down to see where exactly your money is coming from. You're looking at construction for 45,000, your monthly rental per room at 70,000, monthly income at 420, annual income at 5,040, and your gross yield of about 10%. So given that we don't have huge expenses in terms of levies and corporate fees and stuff like that in Zim, your net yield is usually much lower because the tenants then tend to cover things like utilities, and all of that is not covered by the landowner. What I've done here is just a summary of the different investment options that we've looked at, whether it's high density areas to look at. Your estimated yield annual is 8 to 12%, appreciation 10 to 20, high demand on the high density and rental units. Again, maintenance and tenant management becomes an issue. So I'll share the slide later on, then people can go through this in greater detail. Thank you. I hope that is a bit clear. Kura, back to you.
Thank you very much. Simba Wandi Gonera. Hey, yeah, that is a Dubai level performance. Thank you there, my brother.
Pleasure.
All right. So I'm going to ask the stupid question. I'm never afraid to appear stupid. Your investment dollars, are you going to be playing the game in Zimbabwe, or can I meet you at OR Tambo in the next couple of weeks and we do something here in South Africa?
Zimbabwe, definitely.
Unashamedly.
Yes, definitely Zimbabwe.
Okay. 1st of January 2031. Where's your confidence? What are you betting on? What are your risk mitigations?
I think come 2031, the US dollar, at least multi-currency system, will still be at play. Yes, it hasn't been extended beyond that, but I don't think we are there yet in terms of the local currency being strong enough to sustain the economy in the long run. So I think we will continue using the USD. If that doesn't happen, we'll sell off and then look at SA probably for retirement.
Thank you, my brother. The question coming in my DMs, is your presentation going to be available for sharing?
Yes, I'll share it.
Fantastic, fantastic. The bot that took people's registrations, I'll put it up on there and you're welcome to pick it up. My erstwhile colleague, Mr. Kwaye, can also be boosting it, but thank you very, very much. Simba, that was awesome and concise. Somebody did say you were talking too fast, but you were giving us so much good stuff that I get your enthusiasm, and thank you very, very much. Thanks for the preparation and enlightening us all. Of course, I picked up some nuggets there, so I'm going to sound rather intelligent when I'm speaking to the diaspora this side over the weekend. Last but not least, there is a young man who, I'm going to keep it tidy. Simanga, you are I find you a work in progress, but fantastic progress. I love what you're about. I love what you do. I love your enthusiasm. And I love that your brand is young, it's black, it's energetic, and you're doing the things. So I'm going to ask you to do your pitch and talk to us about the wonderful world of TDW and what you're doing and how you're seeing this residential investment market. And I'll ask the questions later. How are you doing it that side? Would you consider doing it this side, Zimbabwe versus South Africa? But I know wakapfeka t-shirt yakanzi TDW because I know your crew there in the marketing, the ladies have got you on point. So I'm going to hand over to you. If I still have you, brother man, would you love to come on screen and talk to us, Mr. Madhlabuta?
Thanks, Kura. Thanks, everyone. Of course, you know that at TDW, we are involved in developing assets, residential mostly, and a little bit of commercial in and around Harare and some parts of Zimbabwe. And just to compress, my remarks into 5 to 8 minutes, I'm going to talk about some of the key things that we look at and some of the things that someone should look at when they're looking to make a property investment that is worthwhile. And this is for the Zimbabwean context. And then I'll quickly just end up with my thoughts on the Zim versus South Africa investment destination question. So first and foremost, retailers, including my friends, I like to say it's all about location. So indeed, you want to take what Karen said, what Kura said, and what Simba said earlier on, and put it in the context of a location, because real estate is one location-based investment, and the location could get you your anticipated returns, or it could end up in disaster. So if you look at Harare, there's been developments in Harare that have led to compartmentalization of the city as it were. The gentrification happening in Harare, is as a result of different things. For instance, we've seen what is happening around the Pomona area. We also have the Greendale Honeydew area being its own precinct, centered around the Eva Bazi food lovers there in Greendale. Then we've got things happening in Westgate towards the new city. And what's happening typically is that the transport situation has not been improving, and you don't want to be living in Westgate, having a kid in Borodobrook and working in Masasa. Otherwise, you'd spend the rest of the day on the road. So developments are now happening in sort of clusters in those areas. So there's now need for all types of accommodation, let's say in the Masasa Greendale precinct, from your 1-bed, your 2-bed, your 3-bed and a 4-bed townhouse, and also standalone houses. The same is happening in Westgate, where Westgate started off predominantly as mid-sized suburbs with 500 to 1,000 square meter houses, and then Bluffville being the larger portions. But we see now that there's also a demand for smaller unit apartments and accommodation offering in Westgate. And as a developer, you want to be able to answer to that demand and meet people at exactly what they want. And with all these locations, the market has got considerations that they pay you for or punish you for. Some of those considerations are, access to amenities, schools, road access networks. Some like access to the airport, access to an industrial park, and all that. So as you choose where to put your money in and where to buy or where to develop, all those location linked consideration become very, very important for you to keep your eyes on. And of course, one is to do their market research very well in terms of offtake for whatever that they need to develop. I posit that if you are going to be developing in, like, for example, if I'm to pick up from what Simba said, if you're going to be developing student accommodation, it only makes sense that it be in close proximity to a university. I was reading now that the MSU Law campus is not going to be in Gweru, but it's moving to be in Kwekwe. And one asks that, the MSU Law campus is planning to have 2,000 students, law students, upon registration, and where are they going to stay? So there you have it. I'll send you an invoice. If you are looking at doing student accommodation, Kwekwe is ripe and ready because a new university is being built there and there's going to be good demand. So you want to link that to your appetite and ensure that there's good demand for whatever type of real estate investment that you are planning to do. And then the other thing you want to obviously look at is the legal framework and consequences of the type of investment you're making. I have a colleague who went in and did a particular development in a location that did not allow for that development and ended up with a white elephant. And now he's facing huge costs of trying to convert what he had built as a small medical clinic to change it to residential because the particular area could not allow change of use for medical for whatever he had built. So those are some of the, just high level considerations I would make when I'm looking at making an investment into real estate, to say, what's my demand, what's the offtake, what is the location, and what is happening within that particular location? Is it in line to my type of real estate investment, and does it align to sort of the demand that I'll get in that area? And then just as a side note, there's someone who mentioned in the comments, and I think Kura tried to answer that, Karen answered that about oversupply. To say, when are we not going into a place where there's oversupply of developments and housing units in Harare? I like that there's a figure that Kura dropped, which is only 300,000 registered title deeds in Zimbabwe. And if you look at that number, juxtapose it with the 1.4 million housing waiting list backlog in the city of Harare, it tells you that there's a huge gap to cover. And at the rate at which we're developing, I don't see us covering that in the short to medium term. Harare is also a very low urban population country. So we're still experiencing a very high rural to urban migration, even to this day. There are more people moving to the urban centers, but we don't have enough infrastructure and enough accommodation to cater for this migration. So that again is another gap that supports the development that's going on, particularly in Harare in terms of residential development. And that to me indicates that we are not yet about to reach saturation. Another factor that I want to look at is from the demand side, to say that, you know, there's not very much investment alternatives for individuals and institutions to put money in Zimbabwe, and that in itself is another driver for growth in the sector that we should witness, at least for the next, you know, 5 to 7 years. There's still going to be very much demand. Last but not least, on that oversupply equation, you know, land is finite. Harare is set, it's got boundaries. It's not going to grow further past Rua or towards Notono in whichever direction, because we've reached the direction, the capacity. And because of that, we have to come into older suburbs that had, you know, previously larger lots of land, and look at how we can add, you know, densify, gentrify, add services, roads, sewer, other amenities, and then build more, you know, residential real estate for that, so that the city grows. So the growth of the city like Harare is not going to be horizontal, as it were. We're not going to keep growing, but we start now. We have to growing to grow by densifying, improving the services. You know, I remember that, you know, 10, 15 years ago, four-ways, post four-ways towards the infant was all farmland. But if you drive there today, you realize that, you know, over 6,000, 7,000, you know, units have been added in that area. And I think Harare is not different to that. We're just behind, but we're going to follow in terms of changing any sort of large, vast pieces of land in Harare, and also all the suburbs that have got big pieces of land are also going to be turned into, you know, densified residential places. Our hope is that, you know, through regulation and through the city, of course, this growth is going to be regulated. It's going to be well planned. We're happy that there's a new master plan that's coming. That's with the city of Harare. And if you know, or have a glimpse at that, you know that the Hatfield Airport Road, the airport corridor, is earmarked for some serious densification. So if I'm looking at where would I put my money right now, I would start considering that particular area now, before that densification craze hits Hatfield and surrounding areas, Manyame, and get into property there, whether it's a small piece of land, whether it's an old dilapidated house. I would get him to hold or get him to slowly develop, because that area is definitely going to be a hotspot in the next 3 to 5 years. Now, to just wind up quickly, I'm seeing that we're quickly running out of time. I'm gonna do a quick comparison of my South Africa Zimbabwe question. And Simba Mupfekeri worked with a $50,000 budget, but double for the trouble. I'm looking at $100,000 budget. What does that get me in Zimbabwe? What does it get me in South Africa? Comparably, I think first and foremost, if I've got 100,000 in Zimbabwe, it would get me 1.9 million rand. What I get in Zimbabwe versus South Africa, in Zimbabwe, I get more in terms of square meters. You would find that, I'll give you an example, a 2-bed unit in Zimbabwe can range between 100 square meters to 130, 140 square meters. That's on average what a 2-bedroom apartment gets you in Zimbabwe. In South Africa, a 2-bed is between 75 square meters and 95 square meters, nothing more, right? So you then find that what you are getting per square meter, you're actually getting more real estate, more brick and mortar per square meter in Zimbabwe as opposed to South Africa. And this information is online, you can verify that. And then you want to look at the sort of rentals that you'll be able to get out of that particular 2-bed. I looked at Greendale and Highlands for Harare, and I looked at Fourways and North Riding for South Africa. You'd find that, you know, in some well-developed corners in Harare, we are achieving 1,100 rentals on a 2-bed, or 1,000 in a 2-bed, but some areas you get 700, 750, just depending on the complex and how new it is. In South Africa, on a 2-bed, you're looking at 10,000. You're looking at 12,000 on the upside in terms of rentals of a 2-bed. But the major difference, like Simba said, the body corporates in South Africa have got high levies compared to what you pay for levies in Zimbabwe. So what you're left with after you deduct the costs of your unit being in a complex in South Africa is much lesser than what you would typically have in Zimbabwe. On that same $100,000 that I played in both markets, I realized that you can achieve between 8 to 11% net rental yield in Zimbabwe, and in South Africa, you'd be lucky if you get 5 to 6%. So to answer that question, Kura, my money is definitely on Zimbabwe in terms of my return on investment, because that's exactly why one gets into an investment. Everything else can follow, but first and foremost, we want to know how the investment performs if money is put in a particular market for real estate. I think that's my short presentation, Kura. I'll be happy to take questions and take the discussion forward. But definitely, I think the play in Zim real estate is obvious for everyone to see. And many options, like Simba said, you could pool funds, you could just do land, or you could do land and develop. But I think one last thing that we see as a property developer is that one can actually start very small in property development, but by looking for property development opportunities and just packaging them before they take on a funder, a financier, or an established property developer. So like you said, Kura, you could do a subdivision on a property that would cost you less than 10 grand. Once you've got the subdivision, take it to the market, find a developer to partner with, and Bob's your uncle, get the project off the ground. That's my 2 cents. Thank you very much. Back to you, Kura.
Well, that's absolutely fantastic. Thank you so much there, brother. I am just, I've just lost my Twitter feed. The power on my phone went down because it's been 2 hours. You guys have been absolutely fantastic to keeping us exactly onto time. But now I'm opening it up to the floor, and people on the floor, you've given us 2 hours. You've got questions. You've got things that you're thinking. Just put your hand up. I'll give you the mic and let's have a conversation. All right, while I'm waiting for conversation to come through, Simba, give me a sense of market size. Talk to me, what is the price point that gets people excited in Harare? What is the product that is just short on demand? And Vamhlanga, I see you there. I'm going to give you the mic after Simba.
I'll keep it short and sweet, Kura. Let's look at Harare North, for example. There are literally three projects, maybe 4 within the whole of Harare North, which cater to studios, 1 beds, 2 beds, because everyone has been concentrating on 3 and 4 beds going up, and they're not small spaces. So in this project, you'd find West Prop, Millennium Heights, you'd find Jacaranda Heights on Edinburgh, the 25 on Thames by KW Construction in Venona, and 2267 on Enterprise by Thatton Properties. Those are the only 4 projects which are offering studio, 1 beds, 2 beds within Harare North. So there's huge opportunity there, because there are people who would want to get into these locations, but they cannot afford a 3 or 4 bedroom cluster unit. But a studio in Millennium Heights at 65,000 and 1 bed at 100K, giving you 1.2 return. It's a very good investment by any standards globally. So I think there's lots of opportunity there. I think people are sleeping on Harare South, which is your waterfalls, Hatfields, etc., because there are huge tracts of land within those locations, but they're still priced fairly low, because a house in Hatfield on 8,000 square meters, you can easily get it for 120,000 square meters. But once you buy that, you subdivide it, you can actually do a huge, massive development there. So yeah, I think let's look into such locations.
Thank you very much for that. I'm coming at you for that 110 in Hatfield. That sounds too juicy. I'm going to talk to you about that, and I'm sure your DMs are going to be popping off after this. I would love you to put your social media handles out there, and if you are capable and taking the phone calls or the WhatsApps, if you want to put your number there, that'll be great. I will be sharing the presentation when you've sent it to me, and I'll send it out to our colleagues. All right, Mr. Mhlanga, I believe it's a Mr. Mhlanga. I'm going to unmute you and ask your question to the esteemed panel.
Thank you very much, Kura. I see you didn't attempt my first name. It's okay. I understand.
I didn't want to butcher it. Nyaxolisa mpo.
I completely understand. Don't worry. No, but thank you so much to all those who spoke this evening. Really great session, very insightful. I had asked my question on the chat, but I thought I'll just bring it out to everyone. I can see that Karen had already put an answer there. But I just wanted to find out from the Zim market, do you guys think that towns outside of Harare have potential to increase in their current rental values? Because I mean, currently right now it's low cost buy-in compared to Harare. Not everyone can afford to buy in Harare, but at the same time, we all want better yield. So with time, do you think the yields for residential specifically will increase in other towns outside of Harare? That is my question.
Thank you very much. To my panel.
Yes, Kura, I'll attempt that. I think that, to my point earlier, I mentioned that there are what we call demand drivers. So when you are looking at a town outside Harare, you want to ask yourself, what are the demand drivers and what are they pointing to? This is why I gave the example of Kwekwe with a new law university taking 2,000 students on first enrollment next year, because that's a demand driver for student accommodation, and you can place your bet on it that they're going to be students and they're going to need somewhere to stay in. So things like, a new mining development in a town, things like, something that boosts population in a town are indicators of future rental performance in those particular towns. Without any solid indicator of demand, I would caution against going into a smaller town speculatively, just hoping that someday rentals will do better in Chirezi without economic activity coming into Chirezi to support that particular boost. That's my reasoning on that.
Thank you.
Thank you. I think just to add on to what Simanga's just said, yeah, follow student accommodation universities. There's demand drivers there. Follow mining projects. There's demand drivers there. For example, even Manize, the new steel plant in Mashingo, there's going to be demand definitely within that location. Look at where anything new growth spurs are coming up. Again, growth of new capital city in Harare, anything in and around Mount Hampton, going outwards into Nyabira, etc. Those are all areas to look at.
Awesome. Awesome. I have a question. I live in the diaspora and very interested in investing in property in Zim. I keep hearing about how many areas like Pomona, Mount Pleasant Heights, to name a few, have no title deeds. Is this factual? Is it factual? How does one protect themselves against such investments? Do I still have you on the line, Leza?
Kura, yes, I'm still here.
Okay.
Am I understanding the question correctly? There are property or rumors of having a property without a title deed.
So yes, I just wanted to bring you in the conversation that in our lovely land of Zimbabwe, we don't have the rigor that South Africa has, where, like a sectional title scheme, you must get it all done, registered and transferred simultaneously. A body corporate is formed, and the steps to do that, we have a little more gray area, a little more latitude. So I just wanted to just catch you up. I'm not going to ask you the question on title deeds in Harare. So I'm going to go to Simba and Karen and say those areas, there's a learning point in this. You don't need to specifically say who is short on title deeds. If you go on YouTube and you see some of the developers, they are giving you a line of sight to say, we are expecting from council compliance by when compliance will understand is part of giving you a title deed. But just give us a temperature check on what's going down on the creation of title deeds in our urban areas. Let's start with those specifics, but then in general, and then how do we keep safe? How do we protect ourselves when we're doing a transaction? What do we look for, and what keeps us safe? I'm going to go Karen and Simba.
All right, thanks, Cora. I think, of course, if people are buying in areas that are yet to have title deed, it's best, first of all, to deal directly with the developer. We do find that some people want to save costs, or at least will have other side groups where other people are transferring property still on session, and they haven't undertaken the due diligence. So ensure, if you are maybe purchasing from another person, that you always go back to the developer to just make sure that that session is what is duly registered. There are segments of Mount Pleasant Heights that still are yet to get deed. Similarly, as well for Gletwin, as well as Pomona. Like you mentioned, there's things that are still outstanding, or the developers would need to have certain things that they need to conclude. So yeah, I think in terms of just advice, I'll just say first and foremost, just make sure that you do go through to do all of the session papers directly with the developer prior to any exchanges of any finance. And then make sure that you have also verified the credibility of the said developer, if there's any work that they've done prior, so that at least you'll know how far away you are from getting the various services or whatever it is that's outstanding for you to get title deed. And then go ahead from there.
Thank you. Simba?
Yes, I think just to add on to what Karen said, there are, yes, Mount Pleasant Heights. I know recently one of the sections which didn't have title deeds before, they are now, the developer has completed works, and they're actually in the process of actually processing deeds, especially in phase 2, which is a work on development, because it means because phase 1 already had deeds before. Phase 2 is now getting deeds. I think what's left is just one of the phases, which I'm sure they're working on regularizing, so that at least you've got deeds on that. So with some of the urban areas, again, like Karen said, work with the developer, double check their progress with council as well, and see how far they are from regularizing and the completion of works as per their development permit. But I think most of the developments within Harare will eventually get title and will be regularized. So it may not happen today in some of the projects, but definitely it will come to pass, especially if the roads and water, the bulk infrastructure is there. There are certain areas where you should stay from, where there are even no roads in those areas, but at least if the bulk of the servicing has been done by the developer, then at least you're assured that probably you will get title in those. And again, always do your DD before you commit your money. Check with lawyers, check with the council, check everything, make sure that the paperwork is on board.
Appreciate that. I'm going to take a question. Hand is patiently raised. So the mic over to you, Mr. Mahachi.
Thanks, Kura. You can hear me?
Loud and clear, brother.
All right, cool. So that last discussion, they just, stirred my interest. So in SA, are there do we have similar issues of developers not delivering title deeds in the same fashion that we have in Zimbabwe? Are there any particular protections that are there in the SA market that prevent that kind of thing from happening on the scale that it happens in Zimbabwe? Is it something that we can learn from and implement here in Zimbabwe? And then it also flows into the other question that was kicking around in my mind about the body corporates, how that is quite formalized in SA, but perhaps not so much here in Zimbabwe. And then it leads to issues with unpaid levies, what to do with owners or tenants that are behind, in these complexes. So what can we learn from the SA side and bring here into Zim to improve that situation, as it definitely has an impact on the value of properties at the end of the day? Thank you. 2 questions.
Brilliant question. Thank you very much. Leza, talk to me about the conveyancing practices and the establishment and operation of body corporates, so that Tafazo can understand.
Yeah, so just starting with the first part of your question, which I think is really important. So in terms of security of ownership, it really starts with the fact that by far the largest part of South Africa is surveyed. There were plans drafted initially, and then diagrams of those plans, etc., etc. So and you can go check the pins and where and verify that a certain area of land is surveyed, so that ultimately when you receive your title deed, you will be able to trace back, if you need to, your earth, wherever it is, all the way back to a Surveyor General approved diagram that was approved and drawn and is available to the public. So I can obtain, any diagram or township plan as it was initially, and then trace it back in the case of a dispute. So along with that surveyed portion, there will be a deed where transferor and transferee and are described, value of the property, the title deed conditions appear, etc., etc. So once again, whatever you end up with as an owner, if there's any dispute, you can trace it back and ensure that you are that your rights are protected. Also, in the sectional title sphere, there will be a sectional plan registered of a whole complex, including the exclusive use areas. And in the event of a dispute, you can go back and actually get the plan, get the details of all the registered owners, exclusive use, layout of body corporate, the whole tutti. It's all available. It's available to the public, and that's incredibly helpful to ensure that your rights are protected and to protect you in the case of any dispute. So that's really the foundation of your security of ownership in South Africa.
To try and link the two, and I understand that there's an asymmetry on the Zimbabwean side on your information. I think we have a situation where it is nowhere near as regulated, where a developer uses finance and relies on a bank, and a bank has got a credit committee, and then he has a compliance department. So every piece of paper, every disbursement, every stage of approval gets approved and signed off like 15 times. In Zim, we are quite lax, and it's a blight on us that I can, as soon as I get a subdivision permit and the Surveyor General is put in pegs, I can go to the market and I can start issuing pieces of paper and receiving money. So the transfer in South Africa, it would go to an escrow account. It would sit with you until performance is given, and performance is very rigid. On our side, we can transfer, and then we can do portions that get compliance, and we can start transferring within a portion of a development. So we're quite the wild, wild west. I think there's a big difference between South Africa having an overarching sectional title act that describes the parties and puts it as a real and enforceable action. A body corporate can take your property, sue it in execution, sell it in execution for the satisfaction of its debts. We don't have that in Zimbabwe. So it gives us a risk.
I'm completely with you. Absolutely, it would give you a risk. We are, and I mean that's exactly what the word that you use. We are very, very rigid in terms of complying with that. We are incredibly rigid. Whether it's an original a township where numerous urban are laid out, or a sectional title development where you've got units in a plan, there will not be transfers. There certainly will not be funds released to the seller / developer / township developer, whatever you are, before those rules are complied with and the property is described to the square centimeter and your rights established.
Appreciate that. Tafazo, I'm going to give you a right of reply there or a follow-up.
Thanks, Kura. So Leza, thank you very much for that. So are you saying that a person who's self-funded, and if they own a particular property, they can't start servicing it, developing it into individual stands until certain steps have been fulfilled? Because, the step about going to a bank and being funded and so on is one way somebody needs external financing. But if somebody has got their own financing, are they not able to do that, to start developing the land and have the stands available? Because the issue that we then have in Zimbabwe is a lot of people will have the finances. They're not getting them from a bank. They get a piece of land and they start doing these individual stands, the individual Fs on that land. But somewhere down the line, they sell them off without completing the services to that land. And then that's where the problems come in, where roads are not there, sewage is not there, and so on. So I was thinking that perhaps there are some protections that are there in the South African context, which are missing in the Zimbabwean context, and which perhaps we need to talk about as an industry and see how we bring those into the Zimbabwean context. Kura, I'm sure you get what I mean, and you can translate for Leza.
I do.
Yeah, so what you're talking about is also to some extent on planning issues. But yeah,
RFK, sorry, Leza. RFK, I'm trying to. RFK, I'm not identifying you.
Maybe you can mute them.
Yeah, but it's gonna be sorry. Sorry.
I'm done.
Kura, I can see them. If you trust me enough to give me host rights, I'll mute them for you.
I trust you. If I don't trust you, who am I going to trust? I'm going to mute everybody, and then
RFK, right at the bottom there. RFK.
all right. Leza, can you just come back in and answer?
So just getting back to the township planning issue. So you're absolutely right. So services would have to be installed. The developer will have to come up with the services contributions, bulk services contributions, to service all the stands consisting that the township consists of. Before, from a local authority or municipal point of view, he will be able to obtain the permissions needed to proceed with that, the sale of the urban in that township. So the local authority in where the township is located would have to be has to provide the permission, the final sign off, in order for the urban to start transferring, and that will be after provision has been made for the services in that township, if that answers your question.
Thank you so much, Leza. Simanga, I'm going to ask you just to quickly just take us through all of the background work that you do to be able to provide title deeds, so that people think, a developer is slow or inept or what have you. What are the hoops that you need to go through to be able to provide that wonderful holy grail document called the title deed?
Thanks, Kura. One of the things that I had in my notes were the legal complexities that we have to navigate in the Zimbabwean market that I think do not exactly exist in the South African market. So before I go over the hoops we go through to provide title, I think I just want to mention that, you guys saw Karen made reference to the freezing of change of use for buildings in any town council in Zimbabwe or local authority in Zimbabwe for the next 90 days. And the unfortunate part about, such haphazard, communications or application of the law or lack thereof, because my reading is that it's actually illegal for the minister to stop application processes, is that it then makes it longer and almost difficult and impossible for us to reach closure on projects and offer title at the timelines at which we had promised to. So for instance, if currently we had applied for a change of use from a single residence dwelling to a multi-residential dwelling, and our permit is with the local authority, what it means is that it's been frozen for 90 days. And this happened again last year, and it ended up going up to about 6 months when council would not issue any permits. It then delays delivery of the regulatory approvals and paperwork. And how it works in Zimbabwe is that one is dependent on the other. So if you don't have the council approval, you then can't have the EMA approval, you can't have the certificate of compliance, you can't go to the deeds office to process the title deeds. But the long and short of it is that there's a list of requirements and approval that one needs to go through in order to reach a point where they can actually get to offer title deeds for the developments. So first and foremost, if the land is in an area that's not designated for residential or for multi-dwelling units, you have to apply for a change of use. Or in other cases, you have to do a subdivision if you want to split the piece of land, or a consolidation if you want to join several pieces of land. And once that comes out, you want to get your environmental management agency to approve the projects on the merits of each not violating local environmental bylaws. And then once you get that, you then get your council permit application in. And then once that comes out, you want to do your building plan submission, and that should also include your water and sewer and roads approval at the city. And this ties into Hilary Joa's question, which said that development of clusters and multi-dwelling units and apartments is putting pressure on the resources. At this point, this is when council then calculates an endowment fee, which developers pay to council. And the endowment fee is supposed to help the council to contribute bulk services for this new development, whether it's an access road, whether it's a sewer connection point, and it's a council water. So to take a side step and answer Hilary, developments and new developments, especially in Northern Harare, actually help council upgrade the infrastructure and bring in newer infrastructure which serves the rest of the community. If you look at the Northern Harare, most developments have got water, have got a sewer connection. And that's because even if council doesn't do what they're supposed to do from an endowment point of view, the developer will make sure that those things are there so that they can get a certificate of occupancy and then issue title deeds. So in short, Kura, those are some of the things that you have to go through in order to get to a point where you get title. So you must satisfy the building bylaws, you must satisfy the city council development bylaws, and then there's an environmental management agency that comes as another layer or developments in Harare. And once you get those things in a row, your last stop then becomes the deeds office for you to be able to process sectional titles for the purchasers if they are different purchasers.
Appreciate that. Thank you very, very much. All right. Any further questions? Okay. I've got Gulandebele coming in. The mic is yours.
Hello.
Yeah.
I think, yeah, can you guys hear me?
Yes.
Yeah, thank you guys. Great chat. Just been listening for the last couple of hours, and I just wanted to find out. I heard a lot of talk about residential properties, I suppose, but I didn't hear much on the commercial side. Maybe those were some of the parameters of your conversations or discussions that you had with your speakers before. But what I would like to know from Kura and Simanga specifically is like, you know, the advantages and disadvantages of the commercial property market in South Africa and Zimbabwe. Because I mean, like you guys rightfully said, we're seeing a lot of mixed-use developments, especially along the enterprise corridor in Harare. We've seen developments in Marondera as well, Koromonzi, and you know. So, what's the upside on the Zimbabwe side versus the South African side with regard to commercial real estate? Thank you.
Great. I appreciate that question. In my notes, I had come up with my commercial arguments. So let's look at where the majority of Zimbabwean commercial assets are, and I would argue that they are in tired CBD buildings. Those CBD buildings, multi-story, built in 1960, 70, few in 1980. We're talking about vacancies of about 40%. I did a survey for a client in what was call it the A grade of the CBD. So that's one picture. That's a snapshot. If you get out of town, the office parks are full. You can't get space in Borrowdale, Avondale, Emerald Hill, Tendeseka Park. You can't get space. And then on retail, if we've got guys from Terrace Africa, they've got a waiting list for the new stuff that they're doing. So I think that there is much demand and rentals are strong. And on Twitter, I tweeted the first mutual life properties cap rates and market rates compared with those with old mutuals cap rates and market rates. So for Zimbabwe, those are available. If you're on this side of the border, we always have great research out of the Ruder report, and they give us those numbers. So I think in South Africa, you're going to get a more sophisticated commercial product with a better credit risk. So I look at real estate investment as I Kuraone Chiota, as the pledge of the Kura Chiota Trust. I'm investing my kids' capital and I'm taking a bet that I can arbitrage between borrowing money from the bank and risking putting in a tenant. I can get better leases with better tenants, with better cash flows for a longer period with finance south of the border. That's not saying that north of the border, and you see the product that's coming in, and I believe I'm quite excited to see a sectional title office development that's being done on Ridgeway North. It's called The Box. That's going to be a test point to say, do Zimbabweans on an office basis, do they want to buy and occupy space? The returns are owner occupiers. I've seen them moving out of CBD. We have all of the 5 banks have left town or are building to be out of town. Standard Bank, FBC, CBZ, NMB, they are taking the view that we want to invest. And for their own use and balance sheet purposes, there's a game to play there. The returns, I'm going to say that if we use a value as yardstick, a capitalization rate, I would say what I'm paying for a 7 or 8% capitalization rate in Zimbabwe, the cash flow underlying that is going to be expensive in inverted commas as compared to South Africa. I'm going to get a Checkers with a 10-year lease and a corporate guarantee, whereas in Zimbabwe, I'm going to get an OK Zimbabwe, and they can write to me and tell me they're incapacitated and they're not going to proceed with the lease. So I'm going to say longer, slower, steadier. You're going to get more value in South Africa, but that's not to say that in Zimbabwe, they're not very real commercial opportunities. Across the road from Highland Park, they're doing the design quarter, and that is showing you that they're leading the way and there is demand for office premises in Zimbabwe.
Okay, well, I hear that, but so are we saying this is a bubble? Because even if you look at the developments that we're looking at Harare Drive, Pomona area, I mean, those are substantive and substantial investments that are being done. And I don't envisage a situation where people are putting in that kind of money in the short term to get short-term gains, if you know what I mean. So is there no long-term, is there no long-term play here that people are really looking at and saying, look, we anticipate that there's X amount of industrial activity that's going to be happening, or commercial activity as it may, that's going to be happening in these areas in the next couple of years that makes them hedge their bets against those areas?
I think they're taking the gap. If you look at the kind of tenants that are in Pomona, it's because post-COVID, 0 people had appetite to drive to a factory in Granite Side. So you've built it on a nice road with good access. You've built more modern facilities. That Granite Side stuff was built with 2-3 meter eaves heights industrial premises. You go to Pomona, guys have gone 3, 4, 5 meters high. They've branded it. The roads are better. Access is better. You can turn around trucks faster than trying to fight to get past Coke Corner.
Okay, no, fair enough. Thank you.
All right.
I don't know, Simanga or Kura, if they have anything to add to that. Thank you.
Does anybody want to tackle commercial? I know Simba, in your portfolio, you've got the Strand, you've got other commercial developments out of Cardinal, industrial land. How's that moving?
Hi, Kura. Yes, we've seen a lot of progress there, especially with your light industrial land, industrial stands, even some of the commercial projects we've been working on. Again, the value is on the upside in terms of purchasing land. And then enjoying, for example, one of the projects we started selling off at $45 per square meter when the developer launched the project. But when they're done servicing within a 10 to 12 month period, the pricing had gone up to about $95 per square meter. On the last unit we sold, there are 2 units remaining there, with the one with the utmost road frontage there looking at $150 per square meter. And again, if you look at the businesses setting up there, especially for the one close to the airport, there's a lot of companies dealing in export. So we do have a lot of exporters buying space there to develop their warehousing, to store their goods before flights. We are also getting a lot of small scale, people requiring storage space, where someone is purchasing, for example, 3,000 square meters, they're putting 2,000 under roof. Out of that 2,000 is being subdivided probably into 5 to 10 smaller bays to compensate or to cater for the SME market and all of that. So I guess there's value at every stage within some of these locations. Even on the higher end, probably the highest right now would be Pomona at $270 per square meter on the land. But in terms of what's coming out on the completed product, there's some of the landlords are fetching as high as $25 per square meter in terms of rental they're achieving with this. So it's quite a mixed market, but there is definitely lots of opportunity in that industrial, semi-industrial space. Even on the commercial front, some of the complexes that we do manage, your shopping centers, occupancy is at 100%. Some have decided to go with larger units. Some have opted to go for smaller 100 5 by 5 or even smaller units where you're doing small retail. And again, these units are all filled up. But again, location is very important, because we had some instances where people move into this space. You've got 50 small shops coming there, but in terms of what's being sold there, not too sure if those retailers are actually making a profit or not, but I'm sure there's space for everyone to make money off that. And in terms of commercial developments coming in and around, not just the capital, but even outside, if you go just down on Tari Road, there's a big terrace project coming off by the KFC corner in Zimmer Park. There are 2 projects coming up by Silverbrook just before you get to Rua Shops. By Rua Shops, Insco is putting up another mall there. You drive a kilometer up the road by Mapazua, there's another mall coming there. So the appetite for commercial space is huge. And I think, like what Simanga said, not everyone wants to drive across town to access Westgate, to access Sam Levy. So the key is then meeting the people where they are. So if it's Rua, 4, 5, 6 commercial centers addressing that 10, 15,000 population is adequate. You've got modern shopping shops there. You've got your coffee shops, your cafe niches, and all of that within that location. So it then also reduces pressure in the other areas.
You're a champion. Thank you very much. Tafadzwa, I'm going to bring you back on.
Kura, as a topic, I was wanting to circle back to the one about body corporates being present in SA, not so much in Zim, and the issues that we then face with complexes in Zim.
Okay. I'm going to throw that one as a hot potato. A hot potato. TDW. There you go. Simanga, would you like to come on camera for me? I do like seeing your face. I do miss you.
I'm wearing pajamas now, Kura. All right.
Job. Wait.
So I was saying Tafaso's question is very pertinent. We have a growing portfolio of properties under management, some on behalf of our investors. And the major difference that we see between South Africa and Zimbabwe is the application of law in terms of body corporates charging rentals and collecting rentals. You find that if someone doesn't pay your levies, rather not rental, someone doesn't pay the levies part of their rental, it's very difficult for you at law to go after them. You can't actually, if they decide not to vacate your property in Zimbabwe, the rent board actually protects them. And I'm yet to understand South Africa doesn't have something like that. The body corporate in South Africa can actually take you to court and attach that very property for non-payment of levies. In Zimbabwe, we do not have the legal apparatus to be able to deal with someone who is reluctant or who defies body corporate in terms of levies contributions. So I think it's a misalignment in terms of law. It's something that affects complexes development, the quality of the complex, the upkeep and the maintenance is then affected because some tenants can choose not to contribute in terms of levies, and that affects everything that goes on with the complex. So I think the answer lies in the law rather than the operator or the manager of the complexes. It's just that in Zimbabwe we don't have legal framework to deal with people who do not pay their levies. That's my thought, and that's what we've observed in the properties we're managing. Thank you.
I'm a layman. Can I not, as Kura developers, put it as a condition of title that when you come in, you're going to be part of, and we can then set a rent, we can set a levy amount so that you have agreed and contracted in as a condition of title? Am I being too adventurous and too bold to try and do that?
No, Kura. In terms of most developments anyway, for the paperwork to come through regarding sectional title, there's the constitution, people do sign up on it. What I found as a difference is that with some properties or sectional title, for some of the ones that were running in SA, the levies or the rates are to the owner's account, whereby here in Zim we have that is on forwarded as a cost to the occupant or the tenant, which makes it difficult then for the bodies corporate because of the high turnover, whether the tenant has not paid rent, etc. That high turnover makes it difficult for them to collect. So there are some places, especially some of them which are share certificate, some complexes which actually have successfully managed to sue for the sale of the unit to be able to recoup back outstanding levies, but it is a process, and that's probably what is one of the biggest deterrent. Some people are not managing their bodies corporate correctly, and some other individuals in their own selves ignore it as a cost that they do not think once they've purchased the unit, it's something that they would have to need to continue to contribute for.
Thank you very, very much. Thank you so much. Okay, I've got a couple of messages here. Simba, you're talking about Border Brook has a very strong body corporate. I would argue that that is because there's a constitution that you signed up front. So it's a tip to developers. When you're doing this thing, you put it up front and say, hey guys, as a condition and terms and conditions attached, as a good lawyer would say, this is what you're going to do. You're going to contribute. These are the costs, and then run it efficiently and transparently, and Bob's your uncle. Okay. All right, guys. I think we have run on and on and on. This has been fantastic. I have really, really enjoyed it. I think our engagement has been incredible. We got to 400 tune-ins on Twitter. We got to just over 170 here on this platform. I'm going to ask my speakers just to give me a wrap-up and a vote, SA or Zimbabwe, and just closing remarks. I'm going to go Simanga first, and then we're going to end with the ladies. Simanga, Simba, myself, Karen, and then we'll close with Leza.
Thanks, Kura. My closing remarks are that, real estate is one investment that you really need to make calculated moves on. It's not always that you follow the trend and you get to win. And in terms of location, do your research. In terms of Zimbabwe versus South Africa, do your research and find what suits your investment style more. But as for me and my house, Zimbabwe is where the money is at. Thank you.
Ngiyabonga kakhulu. Simba?
Thanks, Cora. I think for me, my closing remark will appeal more to our age mates, people younger than us. I would say get onto the property ladder as soon as you can. We all can't afford to start off in Harare North, but start where you can. Start in Glenview, start in Muliriro, start wherever you start, and then within a 5-10 year period, you will eventually make it to Harare North. Because if we keep on saying Harare property is expensive, where do they expect us to live? Start where you start. Start in Glenview, make your way up, do your due diligence, bit by bit. As I say, teaspoon pizza sagare sugar. That's my closing remark.
Really appreciate that. Thank you, brother. So myself, you'll see why I haven't been on camera. I haven't been on
Money in
camera.
Zim.
Of course you're going to say that, brother. Okay. I'm talking picture in picture. I'm using my phone to do the live stream on X, on Twitter. So I think be prudent. If you've got your assets in a jurisdiction, in a currency, consider some diversification. It's not a must. It's not for everybody. You're going to have some level of sophistication and flexibility. I would never advise you buying a pig in a poke. Don't buy something blind. Don't buy something off plan because you saw it on the internet. Come down, spend some time, walk areas. Take some time to get to know the characteristics. What is Rosebank like? What are its prospects? What has it done? What is it likely to do? And then get to understand the nuances between areas. Then when you're ready, do it correctly. It's obvious people can bring money in on the back of a bus. In South Africa, you need to come through the front door. The front door is wide open. You have a Zimbabwean free, what they call it, free funds. You are allowed to invest up to $50,000 per person outside of Zimbabwe. So a couple, you can do 100,000 quite easily. If you do more than that, you are going to go through the Reserve Bank for prior approval and notification, but you can do it. You also want that paperwork to come into South Africa so that you can explain where the money has come from and take a view. So for my side, I love and I play the development game in Zimbabwe, and I do the investing game on my small little family balance sheet here in South Africa. So it's just the river in between us. There are over 130 flights a week between the two nations. So take advantage of that, spread some risk, and invest prudently. Thank you. I'm going to go over to Karen. Karen?
Yes, thank you so much, Cora, and everybody else who's presented and attended this evening. Yeah, my final words would just really be make sure that you are definitely well read into which environment you're going to invest into, whether it's going to be Zimbabwe, it's going to be South Africa. Opportunities abound and situations may not present themselves the exact same manner that you see them last week. So the markets can be volatile, but definitely can produce the best returns. You just have to be quite educated, especially if you're coming into investment. So don't hesitate in asking the tough questions with the professionals that you're dealing with. Have a plan, I think, especially when it comes to this. Let something work for you. I know for many people have utilized South Africa to be able to grow their portfolios and then borrow against that to be able to buy into Zimbabwe. There's so many ways to skin a cat. So yeah, don't be limited in how you want to get into property investment, but definitely get in on it.
Fantastic. Thank you very, very much. Lovely Leza, legal Leza, wrap it up for us. Keep us safe, man.
The last word. Look, my esteemed panelists have said it already. Do your homework. Read. If you're buying off plan or you're buying from a developer, do some research into that developer's previous developments and how it's holding up and whether it was done well and whether the timelines were met. Read the sale agreement, read everything before you sign it, read your sale agreement, read the loan agreement that you receive from the bank. if you're buying into a communal property scheme like a sectional title, read the management rules, read the conduct rules. I'm sometimes amazed, you know, for most normal people, immovable property will be the biggest investment that you will make, and still some people buy a property after seeing the property once. They walk through a house, they like it, they buy it. So don't take shortcuts. The more knowledge you have to arm yourself with, whether you buy north or south, the better off you will probably be in the longer term, and keeping in mind property is always a long-term investment. Thank you very much, Kura. Thanks, everyone.
Thank you. So, ladies and gentlemen, I can't thank my panelists enough, because we wouldn't be able to do this without their input that they've given free, or they haven't yet invoiced me yet, or I haven't invoiced them yet, but they've come on to share. I love the community on the real estate game where people get together and we want to see development. I think patriotism is your economic interest, and wherever your economic interest is with your skill set, real estate is always going to be a local game. Get involved with players who've done stuff, who are doing stuff, and can give you the benefit of the school fees that they have paid. Real estate will never be a one-man game and a one-hit wonder. It's something that we work together, we work on, and it's fantastically rewarding and can build true wealth. As Leza said, it's more than likely not going to be the largest asset on our portfolio and our balance sheet, but I've kept you here for close on 3 hours. I thought we were only going to do 2, but for the support, for the questions, for the energy that you enthuse and give and share, I'm truly, truly grateful. Our contact details have been shared in the group. You know where to get a hold of me on WhatsApp. I'm going to be a little bit quiet tomorrow. I've got a golf day, so I'm not going to be on top of my socials as I usually am. But for you and your time and your investment, please be safe. But get on that first rung of the property ladder. It will reward you richly. My mentor, my late great friend, Ian Fife, told me, Kura, property is the greatest get rich slowly scheme that there is there. Take your time, do your homework, stay safe, and happy investing. From me, it's been a pleasure being your host, and this will be shared. I'm going to put it up on YouTube. It's already up on Twitter, so you can go and look at and record or share and forward to people. But to you and your attention, I respect you and I honor you, and may you grow your family's balance sheet by owning that piece of ground that God gave you. Thank you so much, everybody, and a very, very pleasant evening. Thank you so, so much. Have a good night. Contact details are the WhatsApps are the WhatsApp that you registered on. That's manned by my bot, sometimes a human called Kwaye Zachiota. My technical assistants. I couldn't be speaking English and running 3 cameras at the same time without his help. Love and appreciate you, my boy. And please, let's keep the conversation going, but act, act, act. It's not your intention. It's not that you mark the register tonight. It's when you do something. Buy a stand in Chitungwiza. Go and build in Checheche. Come and invest here in South Africa. We've got you both sides of the Limpopo. Thank you so much, and a pleasant evening to you all. I'm going to stay on the line if everybody wants to chat, but you're all free to go and have dinner, complete homework, and switch on the electric blankets. Thank you so much.
Thank you. Thank you all. Have a good evening.
Thank you.
Sokura.
Yes, sir.
Now, should I just phone you so that we can use vulgar words at each other? Because you did call it Standard Bank instead of Stanbic Bank, so I took offense.
Please find my account. Forgive me, sir.
Nah, cool. Nicely done, eh?
Nicely
done. Nicely done. Good work. Yeah. So you know those 2 issues that I raised. I think there's grounds for us as an industry, as interested parties in the property sector,
Yes.
to, on the one hand, sponsor appropriate legislation. I know the Brook is doing it well, but the Brook is probably an outlier.
Yes.
So I think there's an opportunity for some stronger legislation, which can ensure that the whole body corporate behavior is brought to the country.
Yes.
So I think it's a matter of getting some like-minded people, corporates, property owners, individuals, and we sponsor something. I'm sure it can't be hard to find an appropriate MP, to take it forward for us, right?
I have thoughts. I have thoughts on that, and I'll sit down and take you through that.
Mm.
I've got a resource on this side, a preeminent sectional title specialist lawyer. I've had the conversation with her, and we would love to do something in Zimbabwe. So bring that experience, and then have local lawyers in Zim explain and the frustrations and the pain points, and then get it 3 steps ahead instead of creating stuff all by ourselves. There's a playbook. Yeah. All right.
All right, cool. And then the other question that I was asking about developers. You're still online, eh? You've got nowhere to go.
I have, but I've got other delegates who are also asking questions. I've got a Xiaomi 2202.
Is it?
Yes, sir. So you know where to get a hold of me.
No,
I
that's
hate
fine.
to
Anyway, I've
curtail.
got to drop. It's fine. I'll catch you on WhatsApp.
I
I'll
appreciate
catch you on
it.
WhatsApp. Cheers,
Thank
bro.
you so much, my leader. Thank you so
All
much,
right.
my leader. Sure.
Okay. Thank you.
How's it, Baba?
Good. How are you doing?
I'm doing well, sir. So thank you for the talk. I thought I joined in late, then it ended up being 3 hours. So I figured out that, okay, being 20 minutes in wasn't actually that quite late.
Sure.
So the link got shared with me by a friend of mine, and I found the conversations quite enlightening. So much so because I'm not a property owner at the moment. And I will be looking to be moving into purchasing a property within the next year or two as I settle down. I wanted to know sort of like the scope of services that you guys offer, because I didn't get onto this call having any information about you and what you guys do. So my main thing is I want to know exactly what services you guys offer, and how best can I take advantage of that moving forward, if something that we can work together.
Sure. So on this side of the Limpopo, I am a registered broker with EXP. So we're an estate agency. When you decide to buy, there'll be a transaction fee that will get paid by the seller of the asset who is looking to sell, and that's how we get compensated. If you want a one-on-one where I can build up a business case for you and an implementation strategy and the filters that you can use, so that it's a bit of hand-holding, so you're not making a purchase decision all naked and by yourself. We can talk about something on an output basis. On the north side of the Limpopo, our agents are wonderful people, Karen, Simba. They'll happily take your call and sit down with you and say, look, this is what we've got available, and have the similar kind of structure and conversation. So we're all approachable, always on social media. You've got our DMs to contact us directly, and we're happy to provide a bespoke solution for you. I didn't get the name. I've got your phone's name. I didn't get your name.
Oh, sorry, it's Kumbulani.
Thanks, Kumbulani.
So is this EXP Realty?
Yes, it is.
Okay.
Yes. All right. Okay. Cool. All right. BIMS iPhone. Again, a phone name and not a person. Please jump in.
All right. Good evening, everyone. Good evening, Kura. And I hope you can hear me.
Loud and clear. We can't see you,
awesome.
but we can hear you.
And next time you can see me. So my name is Ruvimbo. And
Yes,
thank you to all the speakers, Simanga, Simba, and yourself, and Karen, and the other lady, the ginger lawyer, that's what you're calling her. This was a fantastic session. So I've been wanting to get onto the property ladder, but I mean it's been a bit challenging because it's capital intensive, and I'm based in Zimbabwe, Harare,
Yes.
and cash inflows are not as always constant. So I've managed to get approval from council to renovate our cottage like into a 2-bedroom, nice, modern cottage. And Kura, I've managed just to get the foundation and the inspectors to approve everything. But now I I just cannot access finance, So I'm just trying to find out if there are ways to access finance to complete like, this project, because my vision was to have like an Airbnb or something along those lines. But in this real estate industry and trying to get onto the property ladder, like Simba said, how then can I get around to access, finance from other people who are on this talk, from Stanbic and other institutions as well. So I think my question is accessing finance to just, build up your real estate portfolio.
I am sorry, I have no easy answer for you there, my sister. That's the gap that's been battling a lot of people in the market. And it's not just at a household level, it's at a corporate level, that if you're a company and you're wanting to build premises, that borrowability is significantly difficult. So I would think on a small basis, and it's a high risk, but personal loans are expensive. But if you can do it incrementally out of savings and then top up and build up some reserves or savings, or you own the property, you get friends together and they fund the furniture or the refurb for some equity in the project. So you shared the risk, you've put your cents together, and you've got a couple of dollars. But that you'd need a co-share owners agreement there. Pay a lawyer a couple of $100 to get that done correctly. But maripa ground aipo on a scale that is commercially accessible to most of us. It's a tough ask. So I can't give you a warm and fuzzy answer there, unfortunately.
All right.
Maybe I
No,
could
I
come in
get
there, Kura.
Sure.
Look, I'll just have to double check in the morning, but I know there's some institutions giving construction loans. I'm not sure that it's FML or one of the First Mutual or one of the banks, but there is someone giving construction loans. Obviously, they will look at ownership of the whole property and so forth. Probably they'll look at cash flows projected and etc. So I'll confirm which organization it is and I'll share with you, remember that one. And also, I've also heard, I'm yet to verify, that there are 1 or 2 institutions giving equity release in some of the properties. So it could be a way to see if you can release equity off the existing main house and then use that to fund the construction of the cottage you're talking about. I'll do a bit more research and I'll probably get in touch and advise.
Smart. Thank you.
Thank you so much, Simba. I really appreciate that. And thank you so much for the session, Kura team. This was eye-opening. I appreciate it. Cheers.
You're most welcome. Thanks for your time and attention. All right. I am not seeing any further hands up. Let me go into questions. 13 new messages. Okay. BIMS, we've answered. Okay, Debbie got answered. Okay.
Hi, Kura.
Yes, sir.
Yes, you can hear me?
Yes, loud and clear.
Sure. I've just got a question on a regulatory perspective. Suppose I buy a dilapidated double story and then I modify it into small sectional, maybe 1-bed seater or 2-bed seater. On a regulatory perspective, will I be in trouble with council if I get tenants on such a property? Provided obviously I don't overpopulate that house.
Sure.
Yeah, that would be my quick question. Yeah.
So Simba has made mention of, and he uses the term due diligence. Your due diligence, any feasibility needs to do 3 things. It needs to be legally permissible, financially feasible, and economically viable. So when you've got a piece of ground, for you to be able to build on it or redevelop it and do what you're talking about, it needs to be within a town planning scheme. So you're going to need to go to the local council office, wherever that is, and say, I've got this house, what rights have I got on it? Then they'll give you a schedule of what are absolutely permitted uses, what you have to apply for special consent to do, and what is prohibited. The subdivision, as you're talking about it, if you're talking about changing the physical structure, the skeleton, and putting in walls and putting in additional bathrooms or kitchens or what have you, you're altering the physical asset, and that is going to require a council plan. That council plan is not just arbitrary and abstract out of their head. It's going to be guided by a number of rules and what density you can put. So there are higher densities like in Mount Pleasant than you'd get in Borrowdale. So you can do that higher density kind of double-story multi-room situation in areas that permit it, but it's difficult to say off the top of our head until we've gone through and looked at a town planning scheme and the rules and what you can do. Then that's the best advice that you can work off. The idea is great, but it has to be regulated and stamped. Otherwise, you get to that situation where the council will say this is an illegal property and they can demolish or ask you to reinstate to what it was. And it's just going to be costs and hassle that I wouldn't advise or wish upon my worst enemy.
All right, that's fine. I'm perfectly answered. Thank you so much.
Cool. Any late bloomers? All right. I think we're going to call it a night right now. Again, winding down to 145 viewers on Twitter. Thank you very much for your time and patience. I hope you found it useful. I can now get on Twitter and go through any DMs that have come through there. But everybody, thank you so much.
Good
Yep.
evening.
Hi, Francesca.
Yes. Hello. I'm so sorry.
No problem.
Really, I found I just put you at the tail end, but it's really been interesting.
Good.
For property both in South Africa and in Zimbabwe, and I wish I had just linked in earlier to take advantage and to tell you my experiences. But nonetheless, I think I'll get you on other platforms. I wanted to find out about mobile homes. You know, I'm seeing quite a lot of these trailers. I don't know, maybe you discussed it already during your conversations this evening. There are quite a number of these, I think it's like containers, but they're being made in quite a flamboyant way these days.
Yes.
And you can actually see some business, you know, blossoming and flourishing from that. I was wondering if you take that and you put it on your 4,000 square meter property, you know, maybe 4 of those, and do business, because we are all looking forward to doing. Do you need anything special? Please excuse my furry friend.
Sure. So I would say take it on advice. So I can't give you binding advice that you're going to put them on tomorrow, but I argue that a container home or converted trailer is not a permanently affixed improvement to the ground. So it is a temporary structure, and that temporary structure within, as I said earlier to Davis, that within a town planning, you can make use of a higher density on that ground. So by all means, explore it. And if it's not permanently stuck, i.e. you've dug a foundation and installed it in a permanent manner, I would say go for it. And 2 or 3 of those units can produce a tidy little income.
Thank you. Thank you very much for that. And thank you for this evening. It was so insightful.
I'm glad you enjoyed. All right.
Hi, Cora.
Yes, Talent.
I'm good. I just wanted to ask, maybe you have information or this is something that you look at. There's a lot of talks in terms of investment in national parks. I'm referring to Zimbabwe's case, where the national parks actually, you can invest in terms of leases, and I hear they can give up to 100-year leases. And this is something that a lot of young people are not aware of. Maybe you have more information regarding this.
Yep. I always buy the Sunday Mail to look for tender advertisements, and national parks do go out on tender calls. I remember it wasn't this December, it was last December. I'd gone, they were doing something in the just past Rhodes Nyenga, where they put it out on tender. They do have an open policy that you can do unsolicited bids. I found those to be a bit sticky and the path is not as clear, but keep your eyes and ears open. And leasing land, particularly from something like a national parks, is you free yourself from the expense of buying land and tying up your capital. So it is a great way. And yeah, I always share local or rural district councils also put out land for tender and for sale, and I share that as widely as I can on Twitter. So yes, you and I can try and do the job of educating people, and we'll always have that megaphone and say, guys, kwaboka kwakati.
No problem. I appreciate my brother. Thank you so much.
Thank you, my leader.
Sure.
Vanu 30 Masara.
All right. Have a good night. I'm dropping off.
Good stuff.
Otherwise, this was very insightful. I appreciate it.
Glad. I'm glad. Thank you, my brother.
Sterling job.
Okay. All right. My numbers are going down there. My YouTube channel, you would be surprised. I have not promoted YouTube pretty much. I think I've got 2 videos up there, but it is money is moving. So it's a hashtag that I use on Twitter. Money is moving, but I will be, and my social media manager is going to get my YouTube sorted out. But this recording, I will send out a link on WhatsApp. You can WhatsApp me on +27 066 386 4090. I'll say that again, +27 66 386 4090. And I will broadcast my presentation, Simba's presentation, and the link to this recording. Okay. All right. I'm just staying on the line here just to go through the messages and get some details, but my throat is done. But I appreciate the time and attention. Thank you, everybody. Great.